Good morning, ladies and gentlemen, boys and girls. How's everybody doing this morning? The gods are on our side this morning. Things are actually working. What are the odds? Good morning, Easy. How's it going, my dude? Yep, if if our YouTube streams work, then yeah, I probably won't be posting to Twitter anymore. Maybe here or there. I don't know. We'll see. But it's just too time. Not going to really say it's that time consuming, but sometimes. Good morning, guys. Good morning, Randy. Randy Trader 1776. Good morning. I'm a little sick, a little under the weather, but we're making do. Oh man. Alrighty. Well, 1 second. Let me send B a message. Alrighty, good morning, good morning. Easy, yeah, maybe. I'm not the only one too. I've seen a lot of stuff on the old X regarding that stuff. So no big deal. It is what it is, right? Yeah. So I don't really know where to start. Maybe we'll start with looking at, who knows, it's always the same stuff over and over. But real quick, let's see what kind of data we got. I haven't even really kept my eye on that this morning. So it would be good to see what kind of economic data we have coming out here this morning. Let's see. So 7 a.m. was mortgage stuff, which actually I should take a peek at that. Non-farm payrolls, 10:30, 10:30. So pretty much everything's coming around 11:30, 10:30, depending on your time frame that you're in. Non-farm payrolls, revision. Oh, did you guys see? I actually didn't actually see. I just kind of read some news about it. The revision on jobs down like 1 million. Classic. They've been doing that so frequently. It's kind of crazy. So good morning, everybody. A long time no see you here. Yeah, I have no idea. Sometimes my computer likes to operate properly. Sometimes it doesn't. I don't make up the rules here. I don't make up the rules, so, So I guess what we'll do to first start is cover a little bit of yesterday and kind of the thesis for some of the market movement for me. There's always more to it, but for me, what made sense yesterday was, and actually I'm going to delete some of the stuff here. I don't need that. I can move this to Dobedea. Sorry, obviously it's been a long time since I streamed. I'm not quite up to speed on all of this. All right, so what we're going to do is we're going to take a look at trading view again. I'm going to bring this guy up here. I'm going to toss this to a SPY chart. Good, we're already on it. Take it down to a 5 minute. That's good enough. I'll even throw this one on the pre-market. Perfect. All right. So let's just take a look at yesterday's action, right? Whether you want to call it choppy, sure, not the greatest day, whatever. I would agree, maybe not the greatest movement day, but all in all, it was a pullback day. Now, the pullback wasn't all that severe, but it was decent, right? So for me, this is kind of a situation where I saw the VIX kind of getting positive. So that kind of kept me on the side of, I think we're going to have more of a lackluster pullback day. So let's look at this 15-minute chart, and I'm going to keep things really simple, just one moving average, okay? So that's the 15-minute. Now, there's many of you, I don't want to say many, but some of you guys are in this stream that obviously got all of this yesterday in our private streams and stuff, so you guys are probably up to speed on this. Henry, good morning to you. Yeah, so looking at the VIX here, we'll zoom out, right? Again, this is the 15-minute. This is kind of a precursor trend, meaning that we typically will look at this first to kind of gauge when things might be changing direction. So yesterday we had the VIX get positive over that 15-minute trend, right? You can see that there. I mean, it's basically kind of like a wedge down. It's almost like a wedge, and then that wedge, if you may, kind of starts breaking up as we start to get positive over the 15-minute trend there. All right. So since we started getting a little positive on that 15-minute trend, that starts to tell us that, excuse me, that starts to tell us that there's a possibility or market on the VIX is trying to get positive, therefore the markets may see negative. All right. Next, we will look at that 30-minute. What's going on, G? Happy to be here. Oh, gosh, TradingView is so lame. So lame. Okay, 1 second. Let me get back to here. Boom, boom. All right. So we just looked at the 15-minute. 15-minute got positive. Here's the 30-minute, right? So basically, once the 15-minute gets positive, a lot of times we're going to look for the market to transition to the 30-minute. Once the 30-minute gets positive, that's kind of a sign to us that we got to be, on alert, because if the VIX continues to hold the positive trend, you will naturally see the market pull back, right? So for me, this is kind of a situation where the VIX is getting positive. It's starting to tell us some of those signs. Okay, you might need to be cautious. And so yesterday, when we see the 15-minute get positive, then it runs to the 30-minute, 30-minute gets positive. To me, that's all signaling that the market should have kind of a lackluster down day. And that's what you're going to see here on the market. Now, how you necessarily use that all in real time effectively is another story. But as far as building a thesis, bias, and approach for the day, you can look at these two markets and kind of get a gauge for what you may expect to be on the horizon, right? So when we see that the VIX is starting to get positive, oh yeah, sorry, this is, yeah, not the, I flipped over to the SPY to kind of show this little down move, but yeah, if we flip back to the VIX, which I'll do. Yeah, so again, we see the VIX getting positive over the 30-minute. Oh, I gotta turn down Discord before that thing just beeps my ear off. 1 second. As you can see, I'm a little rusty on this whole YouTube streaming thing. Open a volume mixer. There we go. Okay. So as the VIX gets a little positive, that's naturally we're going to expect the market to be a little lackluster, right? So now as we move over to the SPY and we just kind of take a peek at what yesterday's action looked like, it ultimately results in a pullback day, right? And I could keep going on about that, but that's pretty much it there. Expecting that the market to be slightly lackluster because the volatility index was giving us long signals. So we'll use the VIX when the VIX gives us long signals to have more of a bearish thesis on the day. And then provide that to the chat, right? So yesterday we see that the VIX getting a little positive. Obviously, I can't rush into our chat or recommend to anybody that you should just be trying to slam the market long bias, because right now the VIX is giving us an opposing argument, which is suggesting down, okay? Now, again, that same stuff that we look at for the VIX, being positive over the 30, being positive over the 15, those are the same things that we look at here for the SPY. Now, look at the start of yesterday. Let's just put a box here. So let's go to the start of yesterday, summer's high. We're not looking at the high for resistance or none of that. We're just looking as a reference point. All right. So yesterday at market open, the markets, I think it was up there. Let me just double check. Yeah, with one pump candle. Yeah. Okay. So like right into the open, whatever, we have this market's up at like 560 or whatever, 561. So it's all the way at 560. And the 50 SMA, I'm going to drag this box down all the way to there, right? So again, the market is extremely far away from support. So when we look at the SPY, the market was trading really far away from the 50 SMA, okay? So there's room for the market to relax, come down, or see the 50 SMA catch up to the price of the market, okay? So generally speaking, the only way that not the only way, but normally if the market's going to decrease or the market is going to come back to the 50 SMA once in a buy signal. So let's zoom out. And I hope that this is all making sense, and it may not be perfect for some of you guys, and it may not make total sense, and arguably that's because I've just been watching this kind of system and market for so long that it's kind of like second nature to me when reading it. Now that might not be the case for you, but I'm doing my best to kind of get us all there. So again, you can see from the buy signal, right? So I'm going to put an arrow. That arrow is the long signal. Yes, basically since this point, Brandon, we've suggested you should be long the stock market, right? In the macro, because the macro is bullish, all right? Come into yesterday, markets are trading where I put this little blue circle, all right? That's pretty far away from the 50 SMA. So if you look at where the buy signal starts, and then you look at where the market's at right now, you will notice that the market has not touched the 50 SMA trend support since the buy signal. Not that it has to, but again, at some point it's pretty common that it's eventually going to revert back to that level, okay? Whether sooner or later, whether for a dip buy or for a new sell signal, it's going to occur, all right? So the things that you're going to look at for the market to pull back to the 50 SMA are things like, is the VIX getting a buy signal, right? So take, for example, let's go back to the SPY. All right, so let's go back and look at where the buy signal starts. I'm going to move this vertical line, but that's your reference point, right? So let's just zoom in here and think about this move, right? So this is the same scale as the VIX, right? So this is a 30-minute chart, right? So VIX starts to get, or the SPY starts to get positive, right? And then since then we've been bullish and we're running, right? Because we're on the long side of the market, all right? If we transition back to the VIX, all right, now look at the VIX, 30-minute, look at it, ready? So that's the transition right there, just that little blip. So the VIX is starting to get positive, okay? When the VIX starts to get positive, and you look at the market and you see the market is still over support, you should be telling yourself the situation you're currently in is the overall stock market is in a long bias macro trend. Simultaneously, before yesterday, the VIX was in a bearish macro trend. So you see this? So look at where the VIX goes bearish. That's where the SPY went positive. VIX is down, market's long. VIX is down, market's long. VIX is down, market's long. VIX starts to go positive. SPY, on the other hand, is still positive. But that VIX getting positive is very well what helps you build a narrative of, okay, if the VIX is turning positive and it's legit, that's most likely going to drag the market down. But since the market is still positive over the 50 SMA, we're not saying the market is going to just tank and go into a selling operation, okay? So the VIX is signaling pullback on the market or lackluster on the market, but it's not there isn't confirmation of like a bigger market pullback, right? So something like that, as we just explained, could kind of help you get your bearings straight for the day or help you with your narrative for the day by looking at those two markets. Did that make sense to you guys? If you could just comment in the chat if that made sense, specifically those of you that don't hang out in our private chat room every single day that probably know what I'm talking about. And on that note, I'll be right back. I'm going to grab a coffee. So put some text here. Alrighty, good morning. Back on here. Appreciate the 26 of you that have joined us here this morning. Really hope we can grow the numbers once again like we did in the past, but that is all. It's all good. One day. Got to be consistent. So as long as our streams continue to work, that really shouldn't be a problem. So yeah, that's kind of what's been going on with the market over the past couple days. Now, what we can also do is, kind of a, well, yeah. Let's get into the pre-market, the pre-market here. Something else to take note of is since the buy signal, which started right there, yeah, that was it, we haven't even really given up the pre-market 30-minute 50 SMA trend. We got a vacuum going in the background. I apologize about that, if you can hear it. So again, something to take note on is that pre-market 50 SMA trend is still entirely positive. So something that we do note is that when the pre-market or the after hours trading charts, for that matter, start to go negative, that's another good indication that the market is going to try to attempt to retrace to the regular trading hours 50 SMA. So yes, it is important, extremely important to use, at least in my opinion, both chart functions. One that shows no after hours and one that does show after hours. So I've made a reference point there for the 50 SMA. Then we're going to flip into the extended trading hours chart. Okay. Basically, we normally don't expect that the market is going to immediately try to attack that 50 SMA until obviously the pre-market system gets bearish. So right now, the market is still holding positive on the pre-market system. Okay. You can see that clearly, right? So market is still positive on the pre-market system being over the 50 SMA. Until this pre-market system gets negative, we generally don't see moves back to that 50 SMA. Real quick, just want to get a little update going. How has the stream been so far this morning? Is it working okay? Is the sound okay? Not glitching out on everybody? Okay, that's good. Awesome. Good stuff. I did notice it kind of loading there for a second. I was really hoping it wasn't going to shit the bed. Okay. Where's Cody? He is sleeping probably in my bed right now. Probably taking up all the covers, all the pillows. Young lad just lounging out. Young boy lounging on daddy's bed. Okay. Alright, so again, I don't really have any sort of big ideas for the day. It always gets a little bit, I don't want to say a little bit annoying, but once you've been in a buy signal for quite some, oh, excuse me, I'm a little under the weather, so Tickles in the throat occasionally. Yeah, once we've been in a buy signal for so long, it gets kind of I don't want to say it gets harder, but the plans become a little bit more challenging, because it's like, okay, well, what are we going to do? It's like, well, we're kind of extended. We're not at the start of a buy move. Today, I don't even know if there's a gap. Let's see. I don't even know if there's a gap. Today's there's like a tiny gap. So even if we do a gap and go kind of 161 move, it's going to be tiny. So we'll see what that looks like. Let's see. So this is the open. So even if, so again, right now we have target suggesting 560.36 on the day. And that's based off of where the price of the market's at right now, which could very well change. But basically our first initial long target for the day is only going to be, it just depends by market open. We still have, 26 minutes, but basically right now it's suggesting 560.36. So, what was that? That's 559, 574. So basically a 60-cent long trade this morning at open. But again, like I said, this is all determined based on where the market opens. So I'm just kind of guesstimating right now, but it's not legit. We actually would have to wait till market open. But again, just based off of if the market did absolutely nothing for the remainder of pre-market and opened here, we'd have a long destination of 560.36, which is basically just going to be below yesterday's highs right there. Right? Now, it doesn't mean that it can't go further. Again, that's not it. We're not going to get into weeds of this and that and whatever and yada, yada, yada. But again, I'm just kind of referencing tools and things that we use to get a gauge on the market. Again, it's not supposed to be pinpoint perfect, but So we could be looking at something like 560.43. So nothing crazy there, right? Versus, I'm going to take you guys back to like this day. So what I just showed you was kind of a tactic we use for measuring gaps. And again, it's not necessarily a perfect system, but it works, I would say, about 65-70% of the time. There was a streak where the shit was not working, but, So, like, take this day back here. Actually, I'll go back before that. So look at what I just did. Let's go over here, right? Go back to where we were at. So, again, we have a potential gap today, right? So you can see this little dotted line that says pre. That's where the market's at right now, price-wise, okay? And we know the last candle to print on the chart was here, which was yesterday's close. So we say if the market's going to open here, and we measure from yesterday's close, which would be right there, that would suggest maybe a move to like 560.42, all right? Now, that's because the gap is super small. The extension isn't very far. All right, so now we'll go back to something like, excuse me, I just did that wrong here, like right here, all right? So let's take this big gap day, all right? So take this big gap day. All right, so we have the open, and then we have the previous day's close, all right? And there's our 161 destination. So on that day, I'd be able to say, well, we got a potential move to 553.38, all right? And there's our top. Okay, now moving into today, or not today, but moving into like some of these gap downs, right? So now you're going to take these gap downs, big gap downs. Oh, simultaneously, let's 1 second too, right? So here's another thing, right? So remember we're talking about buy and sell signals, ready? So look at the market goes below the 50 SMA, that's a sell move, right? So it goes down below the 50 SMA, that's bearish. Previous day, huge gap down, right? So market got bearish below the 50 SMA, enters a selling operation. So the market is more lean to the bear side until it's not, which could change at any time it wants. But ultimately being below that 50 SMA, market's on the bear side, right? So here's your open, previous day's close, right? And then there's your 161 destination. So on this day with this gap down, we did suggest it that you'd be looking for 53129 downside. All right. Now let's take this next example where it doesn't work. So here's a huge gap down, right? So you go, oh, Connor, but you said if you measure the gap and then you do this, then it's going to go to the 161, right? So, but look at this day, it just bounces and reverses, right? Obviously, it doesn't work all the time, right? But the reason, now I say the only reason, but there was many reasons, right? On this day, we did not look for the gap and go or the gap and pull back and go to the 161. We actually looked to reverse the market long on that day's gap. And the reason being is because we were coming into mega support. The mega support that we were coming into on that day was long-term weekly volume weighted average prices, which obviously we track, right? So basically, we're going to go here and pop the bad boy like that. So basically, you can see here, see this market pullback right here. We pretty much anchored that low, and that gave us this dip long. Yes, in our chat room months and months back, we suggested watch the market long here, right? Okay, so then we extrapolate some of this information going forward. But long story short, we knew that in the past we had used this anchor low point to get this dip long in the market, so that when this time around we were selling into that level, we were not going to be short bias. So on that day, and I'll map it out real quick, 1 second. So we're just going to toss it up like this, and we're going to toss it up like that. So we're going to make a zone there, right? And we're going to actually flip this to a pre-market chart too real quick. 1 second. All right, so take that big gap down day. Or wait, oh, my bad. Oh, wow, I'm a dummy. I had the wrong chart up there. I apologize. Sorry. Well, that's lame. My bad, my bad. Yeah, so I fixed that issue. I guess we're gonna have to probably go back a little bit because I don't know how long I was doing that for, but 1 second. All right, so we're gonna repeat like the last 5 minutes, but okay. So we're gonna run through again some gap stuff, and I'm gonna make this quick because I just am repeating myself. All right, so take this gap here. All right, so you have the open to previous day's close. On gaps, we're going to look for 161s, right? Here's a gap down after a sell start, right? So open, previous day's close, 161. So why did we, on this day here, on this big gap down, why did we not look for a 161 target? All right, so you can see the market doesn't go to 161 here. So why is it on that day we did not look for a 161? The reason we didn't look for a 161 there is a couple reasons. One of which being that we had a sell move start here. We had a gap and go here, and then another gap, which was huge, right? So the more you go down, the less likely you're going to continue to have follow through. But the more important reason as to why we weren't really looking for a gap and go on that particular day was because we were coming into some big support that most people have no clue exists. All right, so let's go back in time and we'll talk about this. All right, so basically this low here, all right, we're going to show you kind of an anchor VWAP strategy. All right, so watch this, right? So I'm going to take a VWAP and I'm going to put it on this low. Pretty much that means at some point when the market sells to that level, we're probably going to watch it long, right? You can see that we have shied that level multiple times. So what we're doing is we're tracking the volume weighted average price of a major low that had an extremely strong rally, right? So what we're doing is we're taking the volume weighted average price of that low point and we're going to watch, you know, long bias into that trend. All right. Now, prior to the market pulling back to this green VWAP, we actually pulled back right here and never retraced there. So there's something we call the chase. Don't worry about it. I'm just speaking too much. So basically, since we didn't retrace to this guy and we create a pullback in here, that means what we're going to do is we're going to repeat the strategy but move it up higher. So since we couldn't retrace to this big dip yet, but in the future, I'm sure we will at some point, we chase the move up. Now we anchor the most recent dip, and that's going to give us an expectation of where the next support level is at. And that was one of the most, well, not the most recent, but one of the most recent rallies that we suggested pretty much our chat and everyone on Twitter and anyone who pay attention to what we talk about to be long the market. Okay. After that dip, what did we do? We tracked the volume weighted average price of this dip, and we tracked the volume weighted average price of this dip, along with this one back here, right? So on this most recent sell-off, there was basically 3 particular levels that we were watching for the market to get picked up off of. You can build an assumption that these first 2 would have got taken out, blah, 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 blah. But bottom line, long story short, we were looking at this volume weighted average price, this volume weighted average price, and so on and so forth. And actually, it probably should be like this red guy, but either way. So real quick, I'm going to map off each one of these levels that does end up getting broken all the way down to the levels that actually work, which is like right here, all right? So now what we're going to do is we're going to flip into a, we're going to flip the chart down. We're going to go look at these zones real quick, okay? And I did it quick, so it's not going to be exactly perfect this right now, but for the purposes of teaching, it's just fine. All right. So think about that last down move, right? So let's look at it real quick. Okay. So look at this the last move down in the market, right? So this last swing down. Each one of those yellow lines are weekly VWAP levels that we look to either be basically long bias at, look for trades around, right? And then ultimately a bottom, all right? So starting here on this 5-minute chart, let's get to an extended trading hours chart. We'll actually go to like a 30, 15-minute, I don't know, something like that. All right. So when the sell-off first starts, and this level isn't perfect, but, you know, because I said I did it kind of quick, but ultimately this was our first weekly VWAP level, right? So the market starts to sell off, and as it comes into our first weekly VWAP support, which is this yellow line, right? Bounce. Okay, then it fails the weekly VWAP zone. So now we adjust and we look to the next weekly VWAP long level downsided, which is here. Bounce. And then once that one gets taken out, we look to the next weekly VWAP level down, which is the yellow line. The next yellow line down, which is here, right? And then bounce. So what we just showed you are ways that we look for, I don't want to say bottom ticks, but kind of. It's, and again, you know, I would say that like most mentors and books and YouTube videos and what have you are going to say, don't try to pick bottoms, which is true. You shouldn't try to pick bottoms. What I would say what we're doing is we're seeking out highly valuable locations of the market, and or maybe a better way to say it is we're seeking out value. So we're not picking bottoms, we're seeking value price points, which happen to be a lot of times potential bottoms, right? So we're not trying to pick bottoms, we're naturally just seeking out value. And the value, if done correctly, a lot of times is a bottom, all right? Or an attempted bottom. So you can see here that our particular levels failed 2 times to kind of hold a big bottom until this one. But these were also bottoms. It just depends on how you are viewing it, right? So in the last market pullback, as we're kind of discussing right now, we basically looked for the market to sell down and basically hit any one of these yellow lines. They're not perfect right now, but basically any one of these yellow guys, and then we would look for long moves, right? Where was I going with all this? Hold on one second. Yeah, where was I going with all this? Yeah, I don't really know for sure, but what I do know is that basically we've been looking for the market to be picked up long on any one of those 3 volume weighted average price points. So what this tells us right now is that obviously the market's still long biased. The market is still holding long bias trends. And yeah, I mean, it's pretty straightforward there, I think. And then if you look at the long-term weekly chart, this is a vertical line, right? So Alt V, that's crazy how that happened. I don't know what. Oh, that was the last picture I took, Durr. All right, you see that vertical line? That's where the weekly market went positive. We're still over that. So again, the market's not in a bear market. or even close to being in a bear market. Again, bear markets have nothing to do with predicting a top. See, like, look at here, the market topped, had a really big pullback before going under the weekly and then becoming a bear market. Then we transition to a bull market. We back test the support, rally the bull market. So yeah, maybe the market at some point, whatever, it just had a drastic pullback. But yeah, I mean, theoretically, it can have an extremely drastic pullback down to support and then still stay in a bull market or go into a bear market, right? That's all in the air, fugazi this, fugazi that, right? So bottom line is the market is entirely long bias right now. It's still long bias. The 30-minute macro trend is bullish. The long term is bullish. Everything is bullish until it's not, right? So for right now, market's still theoretically bullish as far as that long-term stuff is concerned. Oh, yeah, sorry. I remember where I was going with all that. Sorry, it took me a second, and sometimes our brain is just filled with way too much information. Here you go. So the reason that I was talking about all that is basically we were watching for long-term volume-weighted average support prices right in these levels. I actually was mapped off all three of these. So what I'm going to do is just take this and make this a zone. So like this, we're going to zone that out, all right? And we're going to flip this back to a 30-minute chart. We're going to flip this to a pre-market, extended hours, boom. All right. So this green level down here, this box, all these green levels, that was our last big weekly support zone, right? So when we're talking about the gap downs and the gaps and measuring gaps and looking at 161s, you'll now understand why we weren't actually following the gap down strategy and trying to go for 161 on that day. And that's because the gap down was right directly into our big weekly support trend zone. Longer term, maybe not long term, but longer term weekly support zone. So we're not going to be looking to short the market into this zone. We're going to be looking to go long, which would trump the gap down system, right? So anyways, that's kind of hammering pretty much everything that's happened in the market for the past couple months, honestly. So cheers to that. Do you do this every morning or just randomly? Elon, is that like referring to the stream that we have going right now? If you're referring to the stream we have going right now, we haven't done this in years. Well, consistently in years, and that was ultimately because I was having so much trouble getting our live streams to work for some reason. And I don't even know why it's working today. I have no idea. But I'm trying if the powers that be allow, yeah, we will continue to stream here more frequently. But yeah, so I'm gonna try to be doing this far more frequently as long as my streams work, which again, when you have a computer with 6 screens and a couple $1,000s worth of hardware, you'd almost be like, well, why doesn't it work? And then when you have not anymore, but when you have fiber internet, the best internet on the planet, aside from the ones, now I'm just gonna stop talking. But yeah, when you have really good internet, like 1,000 up and 1,000 down, it really raises the question, why aren't your streams work? And then when you streamed for 5 years prior to your streams not working, so let's call me a professional streamer, and you've streamed for many, many years and used many, many streaming platforms and set them all up and it works, then why one day does it just not work, right? These are the questions you ask yourself. So anyways, yeah, I'm hoping to be more active on our streams here with you guys. If they all continue to work, then I plan on being here just like this and just to provide daily analysis, just like we do. Ooh, that coffee's getting a little cold. Yeah, so I'll try to be here every day. All I ask from you guys is just to share our streams to wherever you can. Because, yeah, that's really just all I ask. I can go in depth about why I need you guys to share them, but you guys probably know why. So all I ask is you guys share our stream, try to get more eyes on it, and that's all I can ask from you guys. That's all I really look forward to. So, yeah, I mean, you know what I do need? I need kind of like a notepad, because after you cover so much, it's like, thanks, Connor, but like, what does that even mean? Well, Okay, back on here. Sorry about that. Let's see what the news says here today. Nvidia down 10% from all-time highs. Prominent trader says he has cashed out the stock. Cool. Oh, you know what? I don't know if I'm going to be able to find that, though. Maybe I might be able to. I'm going to try to find some example. Well, we only have 6 minutes till the open. That's going to be a little bit, well, we'll see. Again, basically I was trying to kind of teach you guys a little bit about the news narrative flip. I could pull up some examples, but ultimately it's going to be, it's best if, again, you guys, it'll be best if you kind of look and find it yourselves. I'll teach you kind of that, but we just don't have enough time before market open to really dive into that too much, but we'll walk through it, right? So basically since like here, so I'm going to take a vertical line, Alt V, all right, and then I'm going to point an arrow there, and I'm going to take this text, and this text is going to be, the world starts to end. You're going to die. Your family is gonna die. This is what the mainstream media told you because the yen carry trade would end the world. Okay. And then we're gonna do this, and then we're gonna point another line here. You're still dying. And we're going to put another one here, and this is going to be every social media. Oh, that's bad, but we'll just say the whole world died. All right. So if you read the text there, it's all in joking manner, but that's basically what the mainstream media would have had you thinking over the past like month or so, as the whole yen carry trade, mainstream, world's ending, everything's over, you know, you're dead. And now it's like, holy shit, they just pumped us full of adrenaline, right? So the vertical line is, let me add a new text here. This one is actually, this one's more important, less joking, but more serious. This is where the sell signal operation begins. Hence, mainstream news narrative flip to bearish, you will die. Okay. Now we're going to put a new arrow here and a new vertical line. I'm going to move this over here a bit. We're going to do this. We're going to go like that. And then we're going to put a vertical line here. Okay, so Alt V, new vertical line. All right, so you can read all the old ones for funsies. And now we're going to flip over here a bit. All right, so this is where new buy, that's shit. I should make this arrow a little smaller because they're going to see me running out of room. Okay, hold on. Ah, damn it. Let's delete that. Fucking trading view. Garbage. Not really. I actually kind of love it. All right. New buy signal operation. Yen carry trade woes go away. Economic data is good. CPI down. PPI down. Econ data amazing. You're not actually dead. You were dreaming. Most online influencers still dead. But yen carry trade, bro. All right, so now that we got the most important details on the screen, if you look at the first vertical line, it's basically to emphasize where the sell signal operation started. All right. At that point in time, that's where the news narrative starts to flip bearish. The reason it's starting to flip bearish is because obviously those that know and have some sort of, you know, experience or long time ass kicking in the market know that that's where the market started to turn bearish. When the market starts to turn bearish and we go into sell signal operations, the media propaganda machine will start to flip the news narrative bearish to further progress the sell signal operation. Again, it's going to be hard to progress a sell move without the fear. So they program the fear into the market along with the sell signal operation. That's why it was yen carry, bro. That's why you're going to die. The world's going to end, yada, 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 right? And then as the market comes into long-term support down here and then starts to bounce out, it has to first get into a buy signal with confirmation, and then the news narrative propaganda machine will start to flip the narrative. So buy and sell signal operations can be a very good area to know where the propaganda machines are going to start to flip the news narratives. And you can start to kind of predict how news will start to change. Because we know if the market goes into a sell signal, it's going to get bearish, and then what's going to happen? People are going to be fearful, and then they're going to start saying, oh, the market's down 5% or 2% or whatever, right? And then we know if something goes into a buy signal, it's going to go up. So it's going to be like, oh, market goes up 2% today. Market's back. Gains are coming back. Oh, economic data's good, blah, 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 right? So just wanted to emphasize that buy and sell signal operations are flip points for news narrative. So you don't have to necessarily look at the news or read every single news piece to know that it's either going to be positive or negative. You can kind of get a gauge that if we're in a selling move or a sell operation, the news is predominantly going to be shit. And if we're in a buy operation, the news is predominantly going to be good. So someone could be saying like, oh, I can't wait for, you know, something to just give me something that's going to help the market, like maybe economic data, right? So we go into a buy operation, right? So when in a buy operation, you should expect that the economic data release is most likely just going to be good. Or even if it's shit, the market's still going to perform good because we're in a buying operation. So the macro trend is to go long. So regardless of PPI is good or PPI is shit, we're probably still going to go up. Hence the, I don't understand it. Data's good, then it goes down. Or data's bad, and then it goes up. You ever hear that? You guys have definitely heard that, right? Like people talking about, you know, earnings were shit, but the market still goes up. Or, you know, economic data was shit, but it's still going up. It's like, yes, because we're probably in a buy signal. So it's like, yeah, the people that control the market probably want it to go up. Hence, who gives a shit if it's bad? We're just going to go up. Yeah. So that is not one way, that is the way. That's how that operation tends to work a lot of times. Okay. So let's delete all that off the chart because that's just too much fun, right? So now when you look at that, now let's take all that off the chart, and that's what we have, right? So you could, you know, I'll get into the day here in a second. Ready? So like, watch this. Ready? Alt V. World's gonna end. Alt V, or wait, maybe not Alt V. Click. Alt V. Go into like a little mini buy signal. Oh, maybe the world's not gonna end. All right. Sell signal. World's gonna end. Buy signal. World's not gonna end. You know. And it's not always going to be perfect and clean, but like you can get a gauge for it, right? There's other things that we use and so on and so forth, right? But ultimately, that's, you know, a big portion of it. All right, so looking at today, let's go take a peek, see. Let's see what kind of gap we opened up with. All right, so basically, like, I wouldn't have any ideas of going higher. Not that we can't go higher, but other than that, 1618 right now, just because that's the gap target. So if we're going to have, you know, if there's going to be a gap and go out of the gates, we will then look further than that. Let's see where our 30-minute trend's at. So pre-market low. All right, so we just hit pre-market 30-minute volume-weighted average price support, which is right there. That's always our first expected kind of retrace level on the day. I know we didn't get into that today to start, but basically, this is the 30-minute volume-weighted average price of the pre-market session. So what we do is we take the entire pre-market session and we treat that as its own market, right? So pretty much all the market participation of the pre-market rally has, you know, a 30-minute average price zone right there, right? Hence, we're pulling back to test their average price first, shake their hands. If support's good, we'll probably rally out, go hit 161, right? If it's not good, then we're going to end up probably taking this out, et cetera, et cetera, et cetera. You guys get the point. So now we'll go look at a 1 minute chart, or like a 5 minute. I mean, maybe we could look at a 1 minute. All right. So look where the first initial candle goes on the day, right? So you see this candle here, that's the first initial one, right down to the 30-minute VWAP. Bounce. Rolling, you take out the 30-minute VWAP, that's where a lot of times you're going to get a little quicker pace down there, all right? So just an FYI. All right, so now let's take a peek at the VIX. I should be looking at this real quick. Oh, that's right, TradingView is dumb when it comes to that. So let's go back to the SPY, and then I will look at Thinkorswim for that. Okay. Yeah. I'll just throw this chart up here. Again, so guys, remember, that's our pre-market. This is, it's not always perfect, but it's pretty darn good. But again, this yellow line, pre-market, VWAP, support, over, under. And this is your intraday gap target, etc. 161, right? And also, when we bring up the VIX here, so we got the VIX, right? So let's change the settings here. VIX is performing pretty decent there. 1 second. What am I doing? Oh, that's right. Sorry, this chart's not set up properly. Okay. Good to John, thank you. Yeah, John Lightning, thank you. Good to know. Where is what the hell am I doing? Okay, here we go. Wait a second. Something's not right. I mean, I guess it is, but why is that being dumb? I have no idea. It's tweaking. My computer's tweaking out right now. 50, make this bad boy red. There's another chart that's set up properly, but you know, this just looks too scrunched. Hold up, something just does not seem right. Time axis, price axis, fit studies. No, I guess it is. Okay. 1 year day. There's just too much bullshit on this one. I mean, it's fine, but I don't really want all that, but it works. All right, so anyways, we can see that the market is right now on the VIX is still positive. It's positive over that 30-minute 50 SMA. So right now, I mean, the VIX is doing. I'm actually going to take this stuff off for the moment. All I really want is the weeklies for now. No, and the half devs. That should be better. All right, so again, we have the VIX positive. VIX is running green so far. That's all good. 5 minutes positive, obviously. That just looks goofy. It really does. But anyways, we just busted through the half deviation. You got 1 week up there. Mean back to +1 will be 1740. Gotcha. All right, so again, like we were just saying, right? So going back to this 30-minute chart here, that's fine. You can see how the VIX is obviously positive, right? So the narrative of having a gap and a go and running to targets is kind of opposite of what the VIX is doing right now, right? So let's zoom in here a little bit. But doesn't mean it can't run against it, you know what I'm saying? So we still have intraday gap targets up to 560.20. That is our intraday 161 gap extension target. I'm not going to try to get into all the nitty gritty. Well, it could do this, it could do that. I try to avoid that because the market can do whatever the hell it wants. It can go to targets, it can get through targets, it could shy targets a little bit, but just trying to keep things at a simple general concept. You know, this is kind of a lot of times how the market will try to function a bit. So nonetheless, yeah, that's what's up. Target hit, is that good enough, or do we have to wait for a penny tag? Sure, go penny tag it, why not? But you get the point. Let me just double check my work to make sure I'm not wrong. Actually, I think I am wrong. Am I a dumbass? I think I am. Somehow I was off by a little bit. I don't know. Sometimes I do that. Sometimes you're just talking too much. It gets a little, you know, whatever. It's actually a little higher than where we were just looking. Wait, that can't be right, can it? Open. Yeah, it is. Sorry. I don't know what I just did there, how I was wrong on that, but something was off. Open. Previous day close. Yeah. So that's, sorry, that's maximum right there. I don't know what I did there, why I was wrong. But anyway, so this would be like maximum where we're looking for the day. Again, it's not the greatest long kind of press concept, but, you know, and the only reason being is just that VIX. Let me bring the VIX back up. Here it is. Sorry. Like I said before, I'm a little sick. So, again, so you have to look at this and say to yourself, right, the market on the VIX is positive, so long, like extreme long bias concepts are kind of fighting against the trend there. Come on, computer, don't be dumb. What the shit is that? 5, 6, 4. Yeah, it's about there. All right, I'm just gonna take a second here, read through some stuff. Again, guys, look at how the VIX is performing, right? So again, you can see how the VIX is getting, you know, long bias, obviously, over the 30-minute trend, right? And actually, I'm kind of curious, just so let's see this real fast. You know, also too, you know, if you look at like our gap fib, you can kind of see how we've pretty much pulled back, hit pretty much golden pocket. We're about halfway up to that 161 area, etc. Yeah, I mean, yeah, I'm just basically using my eyes and looking at a chart, so you could do all the same. It's not like it's anything super significant, but you know. Won't you take me home? Whoa, no. That didn't work what we wanted to do. Hold up, what is this? 5, 6, 4, 7. Yeah, that's about right. This would also probably be a good time to emphasize that like buy and sell operations on the market are stronger than the volatility index. So, you know, what I'm getting at here is, and again, this is all kind of building, you know, narrative and idea. It's not a one-to-one, you know, ratio into the market. And so what I mean by that is, you know, we can see that the VIX is positive and it's going, right? And it's going up, but the market's going up. So I know there's some kid somewhere, because I just saw yesterday, which is completely fine because I used to think the same things, you know. And when I say kid, it's mainly like someone just getting into the market, probably someone, you know, that hasn't sat around and watched this stuff for very long. He's watching the VIX go up and he's like, what the hell? Why is the VIX going up and the market's going up? It doesn't make sense. And that's because it's not a one-to-one ratio. Just because the VIX is going up doesn't mean the market has to come down immediately or when you're looking at the chart, right? So what we're getting at is that you have the VIX positive, but the market's still going up. And that's because buy operations and sell operations on the market are stronger than that on the VIX, okay? But again, you can see, you know, how this long press is just kind of choppy and grindy, and look at the VIX, right? VIX is kind of very positive. So we're not extremely bullish on the market just in general right now because we're getting opposing signals from the VIX, right? VIX is blowing through the roof basically, and you know, that can be a precursor, right? So anyways, yeah, they don't, exactly just as Spielman said, they don't always trade tick for tick, right? You know, that's not the concept, right? The concept is why is the VIX getting positive, right? Is that a precursor to the market wanting to pull back, right? So just remember that buy operations and sell operations are most important on the S&P 500 or the SPX, as opposed to buy and sell operations on the VIX. The VIX is the volatility index, right? Volatility being a precursor to potential market outcomes. If volatility is increasing, it does not mean that the market has to go down, but it's a good indication that someone sees volatility arising. So though it hasn't been printed on your stock chart yet, it very well could be, because volatility is a measurement, right, of potential volatility. That's really what the volatility index is, right? So anyways, yeah, you guys get it. You be getting it. Right. So even look at like, but here's a good example, right? So look at the VIX over the past day or so. I got to zoom in here, right? So look at the VIX, right? VIX is positive, VIX is higher, lowing and running, and look at the performance of the market. What did you have? You had down, and then this morning you have pre-market support, bounce, still hasn't gotten gap target, not that it has to, but kind of shying that gap run, right? So you're not getting a very bullish market here. You're actually getting a down, kind of grindy pullback scenario, right? And meanwhile, what do you have? You have the VIX, which is telling you that it should be the case. It should be kind of down, harder, not as easy because the VIX is positive and it's running, right? Should being a keyword there, right? Whoa, that's crazy. I don't want to do all that jazz. How is our viewership trending down this morning and the market's open? It almost doesn't make sense. You'd almost think there'd be more people watching the market as the market is open. But again, I don't make the rules here. Oh, man. Yep, the VIX is a very good tool to watch. Absolutely. 100%. You know, actually, I just thought of a better way of saying what I was just saying, which is, right, we kept talking about this buy operation on the VIX, right? So yes, we're getting a buy operation on the VIX. Well, when we see the VIX going up and go, why the hell isn't the market coming down? Well, number one, too, if you look at the volatility index, the volatility index is fairly low, right? It's not extremely high. It's only like 15. If the volatility index was higher and going up, yeah, we'd probably have a bigger pullback, right? Because the volatility index is higher, more volatility. Right now it's low. Volatility is low and we're in a buy move on it, right? Okay. And then number two, when looking at the SPY, we know that the SPY is still in a buying operation as well. And we know that the buy operation on the SPY takes precedent over a buy operation on the VIX. All right. That being said, doesn't, it's the VIX is a precursor, right? So with the way the VIX is moving, yeah, it's kind of in the back of my mind is I think what they're doing and what the market's doing is we're running a buy operation on the VIX to hopefully catch the support up on the market, right? So you can see, and actually let me go back to TradingView for this. So what my assumption is, just kind of in a bigger scheme of things, is right now the market is, let me delete some of this stuff, don't really need it for the moment. All right, trading hours. My assumption is we had a buy signal all the way back here, Alt V, or maybe not Alt V. How is that not working? That's just really, really, really good stuff. There we go. So it was always kind of my assumption that this buy operation we're seeing on the volatility index was basically to be used to slow the market and bring the market back to trend support. Either in the fashion of the market pulls back to it or the 50 SMA catches up, right? And then the market is going to decide whether or not to use the 50 SMA as support and then continue the rally, or if it's going to be sent into a sell signal, right? If the market gets sent into a sell signal, then the volatility index will pop far more. So again, that's where my mind's at, is that we're currently just seeing a, basically just seeing that buy operation on the VIX, and that's what's being used to hinder the market slow it down a bit to catch it back up to support, bring it closer to support. Could totally be wrong about that, but that's a lot of times kind of what we see there. Good morning, ladies and gentlemen, boys and girls. How is everybody doing today? Also, we should check SPX. I wonder if SPX already got its targets. I totally forgot to go over this with you this morning, but it's always in the back of my mind. I'm always kind of watching it. But basically, I use SPX and SPY hand in hand. So we may have already got the one. We probably already got the 1.6. Yeah, see, we already got the 161 target of our SPX move. And this is generally what I first look to get, the 161. I forgot to mention it to you guys this morning. And that's mainly because most people look at the SPY and less people trade SPX and whatever. But we've already got 161, right? So a lot of times what happens is you'll go to 161. You might hesitate the 161 on SPX, but once that hesitation's done, then you attack the SPY's target. So if we look at, we put a horizontal line. Oh, I don't need to do that. I could just look at the 1 minute, right? So you can see pretty much right out of the gates, the market just shoots straight to 161, right? So first 1 minute candle, gap target achieved there, 161. Hesitate, break out. And now if we go look at SPY probably just got 161, or really darn close. Let's see. There it is, boom. Okay, our initial long concept for the day is done there on SPX and SPY. So whatever happens now is kind of bonus round. Who really cares? Our long target for the gap today has been achieved. Done deal. Cheers. I'm gonna go get some coffee. I'll be right back. Alrighty, why is my computer so jank sometimes? Does anybody got any questions about today? Nope, no question. You guys are all perfect. Wow, what are the odds? Yeah, I wish I had a little bit more to say there for the moment, but don't really got much to say. We're kind of in the chill and relax, and that's about it. And basically, I don't know. Maybe we continue watching the market go up. You know, this is kind of where I don't want to say my job is done, but you know, it's pretty much it. Oh, we do got some data coming, so we'll see what that brings. I kind of forgot about that. 1 second. Non-farm payroll annual revision. That'll be interesting. So that's gonna be in, or did that just come out? It did. Or wait, yeah. Why is this not? Am I tweaking? Wednesday. Oh wow, I told you I'm an absolute dummy. I guess me being sick is definitely fogging up the brain. Oh yeah, we also got FOMC today. That's funny. I literally wasn't even thinking about it. It didn't really cross my mind. Hold on, guys. I'm just kind of doing a couple things. What? All right. Extended trading hours, perfect. You know, something else that I guess is probably worthy of notating here, maybe if my computer ever works, is you can see the market has pretty much reverted back to the long-term mean. All right, so this is another thing that we follow all the time is, you know, if you look at the last 1 year's trading activity, the white line you see in there, I know it's a lot of lines, kind of weird looking, but if you look at that white dashed line in the middle, that is our long-term statistical mean. That's the average return of the market based off your long-term channel, whatever you want to call it. So what we just saw on our last market correction was a decrease on the market, a total decrease from all-time high to, I don't know, somewhere the low was about 10%. So we had about a 10% decrease, right? 10% swing down. A 10% swing down takes us to the -1. So the -1 deviation level, right? Now, obviously, most things revert back to the mean. So when the market was trading down here at -1, you had a potential return back to the long-term statistical mean of, 10%. So the market was on sale 10%. And those that follow regression know that we had a, potential for a 10% increase back to the mean, right? So that's just kind of like basic common, I wouldn't say it's common, but once you learn it, it becomes common. But that's just basic statistic regression channel analysis, right? Oh, you know what? I'm an absolute dummy. Totally. Oh my gosh, it makes so much sense, and I totally forgot. This is. I'm sorry, I made some mistakes today. Not that I made mistakes, but um, yeah. I mean, Connor. Like I said, I'm kind of sick and I'm moving slow this morning. So this is gonna paint the picture so much clearer for you guys. But I mean, I did an okay job explaining it. But this is it right here. You see, 2 p.m. FOMC. That's exactly why your VIX is up. I'm such a dumbass. I can't believe I didn't even think. Well, I know why, because I wasn't really paying attention to the econ data. So, I've been sick for the past couple of days. I've just been kind of lackluster. But, yeah, we have FOMC. So, duh. Right? So, duh, the market is fucking, the VIX is freaking positive. Duh. It's like, obviously, right? So we have FOMC today. So what you've been seeing over the past, gosh, I can't believe I missed that. That's too funny. Yeah, so what you've been seeing over the past day and a half is the volatility index in preparation for the volatility event, which is FOMC. Like, gosh, it's so obviously, it's just too funny that it's so simple that, I can't believe I even missed it. But yeah. That's what happens when you're not on your game sometimes. But yeah, we have the FOMC meeting coming out, right? So it's already expected that volatility comes from that. So that's why your volatility index is up. It's in preparation for that. So yeah, so this is what that means too. It's slightly different narrative than earlier. But, the volatility index is up leading into FOMC because FOMC is going to bring volatility to the market, or generally does. So the VIX is already in preparation for today's volatility event. The volatility started picking up yesterday in preparation for this. So this puts it into a situation where if the data is, let's say the data is bad or whatever, or the outcome was bad and things went down, then the VIX was already prepped for it, right? But the reality is, I mean, the market's going to react however it wants to react, right? My assumption is, since we're in a buy signal, that the outcome's going to be good, right? That's generally the way that I think. Now, it's not always going to be right, because eventually trends have to change. So eventually that thinking eventually, fails for that matter. But the volatility index is up, obviously, because FOMC, right? So the volatility index is already in preparation for that. And then again, since we're in a buy operation, since we've been in a buy operation, right, the thesis is generally that the outcome would usually be positive. Again, the buy signal started back here on August 8th. It's now, the 21st? Yeah, the 21st. So we've already been in this buy operation for quite some time, right? So I'm actually kind of like on the fence a bit. I'm on the fence because we started the buy move back here, and all of the previous economic data announcements were used to run the buy operation higher. And so my thoughts are it's either good and we keep ripping, or they're going to use the FOMC to maybe bring us down to support. Something like that. I'm not going to say that the FOMC is going to send us into a sell signal, because until we were in a sell signal, we're not in a sell signal, and I won't even try to think that, right? So for me, it's either FOMC data, whatever it is, just launches the market, or what we're going to do is we're going to reset the market back to support, which kind of sounds stupid saying it, because basically all you're saying is, well, it could go up or it could go down. It's like, well, no shit, Connor, right? But that's, to me, it's like, I'm not thinking we're going to do sell signal yet, because we're in a buy operation. So knowing that we're in a buy operation, I would only think it's either bad to reset long, or it just blows everyone out, because everyone's probably like, oh, market's high and it's got to come down, and so we're going to short into, or FOMC, we're going to be bearish and whatever, right? With no respect to the fact that we're in a buying operation, right? So someone could be shorting this top thinking it's supposed to be a top. Meanwhile, we're in a buy operation, so it's not, right? So anyways, that's a little bit more of the take there on the market this morning. So I hope that makes sense. Sorry that I missed that this morning, but SPY gap fill to happen today or tomorrow. I'm not sure which gap you're referring to. If you're referring to today's current gap, maybe. Again, I don't really think in terms like that. I don't think, is the market going to fill this gap today, or is it going to fill it tomorrow? Generally speaking, if we have a gap, I never expect the gap to get filled for that day. I expect follow through in the direction of the gap prior to thinking gap fill. See, because and that's when I'm thinking of that question about the gap fill, right? Look at this gap, right? So this one was gap go. This one was gap go. So if you were sitting thinking of gap fills, you'd be waiting for these still, right? And both of these gaps to be filled down here, if you're looking at this chart function, right? If you look at these gaps right here, those gaps are where? Those gaps are currently below our support trend, which is this yellow line. So to fill these gaps down here, you effectively need the market to sell off, then go into a sell signal, and a sell signal operation to have at least some follow through. There's a lot of things that have to take place before you could even consider that we're attacking that gap. You could build an assumption that, yes, some point in the future, we're going to fill that gap, which is probably true. But there isn't necessarily anything triggering an event, or there's nothing taking place that would suggest to me that, yes, we're going to attack that gap. All right. Now, regarding to today's gap, I think today's gap is more likely to be filled than obviously these ones. And the reason being is because today's gap is currently above support, right? So if, say, FOMC comes out bad, they reset the market to support, yeah, you're going to fill that gap on your way down to support trend. Right? So the probability of filling today's gap is obviously significantly higher than filling any of those gaps down there, and that's simply just because it's closer, not as far away, etc., etc. Ooh, look at the big old drop ski. All right, so market's actually coming down now. I can already tell you what's happening. We're taking out some important trends. So let's get to the pre-market. We took out the 1 minute trend there. I'll go into all this. I know I was kind of like doing some other stuff there, so I probably didn't help you guys on this drop, but 1 second. Let me delete all this stuff off. I'll just redo. It doesn't even matter. All right, yeah, so I mean, gap's pretty much filled at this point. All right, cool. Oh no, I didn't want to die. Get back to there. Yeah, boom, boom. All right, so you remember earlier when we said we're not looking for anything higher than the 161? Does it make sense now? All right, so what was our long target for the push this morning? Boom, 161, down. Doesn't always work that way, but you guys get the point. All right, now what I'm going to do is I'm going to take us back to this pre-market. We're going to look at our pre-market 30-minute trend, which I believe we could be taking out. We're right on it right now. So we slipped that by a second or two. Okay. So right now the pre-market 30-minute trend is getting attacked. All right, and now something else we always kind of look at, we look at a lot of times the intraday from the lows. So if you look at the intraday, so we're taking a volume weighted average price from today. I wasn't necessarily prepped for this because I was doing so much talking with you guys, but there's a couple things I would look at here, kind of like the opening price, volume weighted average price. So we're going to take everyone that's been long for the day. So all of this, everyone that's long for the day has just stopped out for sure. All right, they all just stopped out below their volume weighted average price. All right, and even if we look at, you know, kind of this one, this low here, the reason I kind of like this low too is because this low is kind of more in tune with the breakup in the rally as opposed to this early morning kind of chop. And they arguably got taken out up here. So I would say the decent rally and the pre-market low, they all got taken out right there. All right, so something pretty common too is you'll see this market bounce back and even go to retest that previous breakdown, because why not, right? So yeah, you know, just typical market stuff. On the daily, yeah, so yeah, hopefully I answered some of those questions as far as like the gap fills more correctly. Again, guys, don't be surprised the market comes up to back test the breakdowns. Oh, sorry, a little slow. All right, and then I'm gonna run this guy off the highs. Why is that? Like, that doesn't make, oh, I see why. Really? That's just weird. Boom, boom, and then we're gonna run this guy here. All right, so clearly you can see we've bounced. We're kind of back to the opening candle volume weighted average price breakdown. So where everyone who is long from the low of day, well, this is low of day, but initially the low of day, every single dip on the planet, they all stopped out, slammed down. Now it's bounced back to where basically some of their average prices would be, et cetera, et cetera. Do I have the same gap on the daily? Let's see. Check on the daily. Check on the daily. Check on the daily. Is it this one down here that I'm pointing at? Higher. Yeah, I mean, I don't have one there. Or are you talking about this one here? Or wait, just under it. Yeah, I don't have any. Yeah, no, I don't have one there. On the daily chart, that is. Unless, maybe, let me just double check. Sometimes the data from platform to platform can be a little fugazi at times. Let me double check the SPY here. Oh, nope, no, oh, I see. Wait, no. Nope, I don't have one. I can't. YouTube doesn't let you share links in live streams or something like that, so I can't see anything. Yeah, I mean, if you're talking about the, I mean, if you're talking about the gap up to 56209, yeah, if that's the one you're talking about, then yeah, we're looking at filling that gap too. Now, basically, when you come into the first, kind of gap tag, you'll have some resistance, right? So this is a lot of times where new, I would say newer traders or just anyone looking at markets will kind of struggle a bit. Not that doesn't even make sense, but basically first gap tags a lot of times are going to have resistance. Once they have resistance, that gets taken out, then you'll fill a gap, right? So basically, as you start coming into the gap, you should never expect you're just running up to fill it right away. Normally, it gets met with some resistance there at first gap tag resistance. Yeah, yep, yeah. So we are looking to fill that gap, yes. Um, just in general, that is part of the plan. Gaps can be left open too. It doesn't have to go up and fill. You know, um, so like if you look at today, right? If we go back and just kind of look at today's session, right? So for me, there's a gap to fill up to 562. But based off of today's intraday gap, I was really just looking for markets to get towards 560.48, right? So if it goes up and fills the gap, then awesome, right? If it doesn't, then whatever. Maybe tomorrow, well, we have FOMC coming, so I'm not even, but let's just say there was no volatility event. All right, so let's say the market didn't do anything for the rest of the day. And then tomorrow, pre-market, there's another gap up, right? And based off the gap, the 161 target, let's say, ends up being, sorry, let me just, I'm just drawing this for the point of this, right? But let's say tomorrow, the 161 target ends up being 562 based off the intraday gap or overnight gap. Sorry, not intraday, but overnight gap. So by tomorrow, we'll say that there was an overnight gap, and based off the extensions, it's probable that we could see a move to 562.33. Then I would say, hey guys, looks like we're going to fill gap today. Or maybe there's a better chance we fill a gap. All right. Now, considering that we've already hit our gap extension for the day on both SPX and SPY, and it's an FOMC day, I would be less inclined to see the market just run away to fill that gap prior to the announcement. That being said, the market can still do whatever it wants, but that would be my thoughts. My thoughts would be less likely market just continues booming out and running all the way to 562 and filling the gap prior to 2 p.m. with the announcement. But hey, maybe it does. Maybe I'm wrong. Again, I have no idea, right? But based off of all the other things I look at, I mean, I wasn't really, I wasn't looking for gap fill today. I was looking for about 560.48, which is our first initial long push to first market rejection. Oh boy. And again, so remember we're talking about too, so I'm gonna put a little box here. Remember our pre-market low. So remember we're saying we treat the pre-market as its own market, different from live hours, right? Based off the pre-market session and everyone that transacted this morning in the pre-market session, we had a key volume shelf level at 55934. Meaning we would look, and I'm going to change the color of this a little bit. Make it outline yellow. Make it a little bigger. There you go. So that yellow box right there, right? Basically, we had support built from the 30-minute chart in the pre-market session. So everyone that transacted this morning pre-market, short, long, dips, tops, whatever, from the low had created a volume weighted average price shelf right around 5. Well, I mean, it's pretty much, it was 55934 in that area, that yellow box, right? So when we come into the morning each day, we pretty much are expecting that. I don't want to speak too much, but ideally we look for pullbacks into that level and then supports, right? Same thing vice versa. If it was a bearish day, actually, I can show you yesterday's where it kind of fails. That concept fails. All right, so watch. So we're going to take this guy here, and I'm going to do another one here. And so that would have been right here. So yesterday, in our live chat room, we had suggested that you should look for a long to start the day back to here. If it holds resistance here, you can look for a short. If it doesn't, then you're going to go through a further push, right? And so on and so forth, right? So that's kind of the concept there, is that this was the 30-minute pre-market shelf. So anyone bearish yesterday from the highs, I don't know what just happened to my chart. It's kind of being dumb. Yeah, so anyone bearish yesterday from the highs of pre-market had an average price at about that yellow box. So our objective was to first go back to the yellow box, basically take everyone from, remember, the pre-market session. So I'm going to highlight the pre-market session, which is this yellow. Maybe I'll turn that to a different color. So we'll take the pre-market session here, take this guy green. So everyone from the pre-market session everyone from the pre-market session kind of being bearish on the roll had an average share price of 560. So as the pre-market session ends and we come into the new session, the live trading hour session, we know that there's a good volume shelf there that we could very well attack. And if in doing so, it will take everyone that transacted pre-market and basically put them on tilt. Same thing here today. We knew that from everything that happened pre-market, we had a nice volume shelf in the 5.943 area. So initially pulling back there to start the day would put everybody on tilt. If it can hold support, that means the pre-market trend holds true into the open and we press up, right? It's kind of, that's basically the concept. I'm going to try something here. So we're looking at all the live streams that are currently being populated on the old YouTube in incognito window. So not signed in, not tracking me. And I don't know, it's hard to find me. Even though I've asked for all the live streams that are live in this second. I don't know. That didn't work. Hey, there we go. You have to type in. You gotta type in my titles near all time high. Hey, finally got him. And this, ladies and gentlemen, is exactly why I suggested earlier you will have to help me share the streams. Apologize for that vacuum in the background. Let me close this down for a second. Okay, back on here. You set a VWAP. Yeah, so if you're on TradingView, you're going to go into, looks like it's called the projection tab, and then you have anchored VWAP right there. Click it, and you can throw it on the chart. You just click it, click a candle. Then you can go into settings, change setting, high, low, etc., etc., etc. If you're looking for like a long move, we anchor low. If you're looking for short moves, anchor high. Nice boom. Good boom. Alrighty, ladies and gentlemen. Looks like market has blown up on the old daters. Yeah, again, I don't have a whole lot for you guys. I mean, the whole day's already kind of, I don't want to say the whole day's already played out, but as far as what we'd be looking for, I mean, it's played out. Market is in a buy signal. We're not in a sell signal. We have run to the gap extensions, and heck, we might even go get that gap fill prior to FOMC. You know, I don't make the rules, but let's see. Oh yeah, it's actually right there. Truly looking at the gap, it would be that, which is 562.12. Hey, maybe we go get it before then. And again, I don't make the rules, and I'm good for today because my trade plan and all that concept have already worked, which was basically to watch up to the gap targets today. And everything after that's just kind of bonus round and playing around. Oh yeah, so remember earlier when I said that, you know, for those of you that are still on, remember earlier when I said that it really doesn't even matter what the data is. If you're in a buy signal, it's most likely that the market's just going to go up. And if you're in a sell signal, then it's going to go down, right? So if you look at the news, I don't know why it's not pop. Oh, that's all it is there. So at 10th, whatever. So we have this U.S. payrolls benchmark, whatever. All right, hold on. Let me bring up something else for you guys too. All right, so, and see, this is the stuff that like new traders to the market should be, you know, kind of watching. So, or kind of like learning. Yeah, I don't know why this came out so delayed on. Again, I have no clue. It's kind of weird this morning. Because that'd be 10:30. Who knows? I have no freaking clue, actually, to be honest. Because non-farm payrolls revision is supposed to be at 10, but my news is saying that the payrolls benchmark shit now is at 10:39. Well, they just revised it again. Again, I have no clue. It is so weird. Anyways, it's almost like that didn't come out at the right time. But anyways, so look at this. You have U.S. payrolls benchmark minus 800,000 versus basically 187,000 prior. So that's a big jump there in negative numbers, right? And what did the market do? Went up. So even though, you know, people, even though that's bad, it's going up, right? Why? My whole thesis is just because we're in a buy signal. So it's more likely that you see markets go up when in a buy signal than go down. So regardless of data's good, bad, shit, this, that, it's just the trend of the market. So what you just learned here today should significantly help in reducing your confusion and or thoughts about how data can affect a market. All right, when in a buy signal, expect it's just going to perform better. When in a sell signal, it's not going to perform as good, regardless if it's good or bad news, or if the data is good or bad, right, et cetera, et cetera. Now, some may, and the other side of that is that, you know, with the Feds raising rates over the past, you know, year or so or whatever, the objective is to slow inflation. How do you slow inflation? You make people unemployed. You make people make less money. You stop people buying houses, buying cars, all these things in an effort to slow the economy down from overheating. So if people lose their jobs, there's less people on payroll, et cetera, et cetera, et cetera. That means people are making less money. If people are making less money, they're spending less money. If people are spending less money, then inflation should theoretically come down. So if unemployment's going up, that's theoretically bad for, you know, people, but good in the offense for taming inflation. Hence, market go up. So that's another side of bad data is really good for the market and good data is really bad for the market, depending on what the objective is. If the objective is to tame inflation, then yeah, you know, people losing their jobs is a good thing because then inflation would be hopefully getting tamed. If you're trying to tame inflation and the jobs market is booming and pay is going up and payrolls are going up, that means people are making more money and they're more likely to spend more money, and then inflation is less likely to come down. That would actually be bad, right? So it does take a bit of kind of understanding the scheme. But yeah, here you go. Cheers. Now we just pretty much went and got gap fill. Somebody asked me about the gap fill earlier. Like I said, I have no idea. We'll see. Maybe it happens before FOMC, but hey, it just happened. Cool. Great. So cheers to that. What a beautiful, beautiful press on the long side today. So you notice how I said that, you know, in this text here too, that, you know, this text is put right at the overnight target. So that's our overnight target. That is irrelevant of what the market may or may not do for the remainder of the day. But based off what happened on the overnight session, we'd be looking for that to occur, which has occurred. Absolute grippy, absolute rippy. Beautiful thing. Beautiful, beautiful. See, now this, it would be more efficient. Never mind. Just forget about it. It ain't even worth it. But actually, what's kind of, so like, you know, I mean, I could keep going on. I mean, see, now it just comes down to like smaller reset trades and yada, yada, yada. But basically what we're going to do now is we're going to look for at some point markets to retrace to, if this fucking thing would ever work. Please, thank you, thank you, thank you. Gosh, would you work? It doesn't make sense. I'm directly clicking it right now. Golly, I'm about to move this thing to a, like, I don't even know. There we go. So basically what we have here is we have a long trend that pretty much started from all this data push and whatever. And so we would generally expect that on the 1 minute scale, our pullback is going to be down to like right here. So I'm going to draw another little box. So like that's where we're expecting our next 1 minute pullback to go to. I guess it doesn't have to, but it's pretty common. So this red candle, maybe the next one, you know, arguably sink down to here. If they're running an algorithm push, they'll basically just keep resetting the long up, and then you just have to keep chasing it up until it breaks down. But like, you know, this is where we expect our next 1 minute dip to go. Obviously, that's going to change if we keep pressing into new highs and then we reset it. This is all very small, minuscule 1 minute stuff, but you'll get the point sooner or later here. Just give it a sec. Do 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 do. Bro, how I'm moving this? Fuck this, dude. This thing is. I just don't understand. It's like it does not. It's like it does not want me to be on anchor VWAP there. It's so odd. Hey, that's cooked. It doesn't even matter anymore. Let's do this daily. Run daily upward distro. Bro, it's ridiculous. Alright, so there's your 1 minute pullback as suggested into our most key volume shelf. On the 1 minute, 1 minute's breaking. So a lot of times we're probably going to slide down to our next zone, which is right here. Oh, sorry. So since our first 1 minute zone broke, that means we slide to the next, generally speaking. So the market's basically going back and attacking all the previous dip long levels, volume weighted average price levels. There's your second zone hit. You can see we take out that first one. A lot of times it can slide to the next one down. Again, this is very minuscule stuff now, but you get the point. All right, Spielman, have a good day, my man. Have a good day. All right, the 1 minutes are all taken out. This is where we're going to transition to the 5 minute. So now the market is most likely going to sell into your 5 minute key volume shelf levels, which is right here. There we go. So now we're into the 5 minutes, and now this is where we're probably going to get a little bit of a bounce. A lot of times that happens, no promises, but 5 minutes are stronger than 1 minute. And also it's 10:48, so there's 2 minutes until we transition to a 5 minute candle. So this may probably going to have to wait a couple minutes here before we even see resolution. So if this is going to have any sort of pickup, a lot of times it's going to transition into the next 5 minute. Also, we filled that gap too, so it's like we're not making big plans here. This is all 1 5 minute small stuff. You guys get the point. And actually, hold on 1 second. I might have done something wrong here. Wait up. Let me just double check. Yeah, well, no, it's right. Yeah, I mean, all there. Right now, the 5 minute, again, like I said, the 5 minute trend is getting tested. So, 5 minutes stronger than 1 minute. But anyways, you guys get the point. This is where if this fails, the 5 minute fails, etc., etc. Kind of looks like garbage, to be honest, but. And remember, we got the low side. Oh, we just okay, 5 minute snap. There it goes, dump. So what you pretty much just witnessed was the 5 minute higher low fail sequence. You see how the market waited till that next 5 minute, then dumped it. So that's it. If the market was going to hold it bullish, it would have held it bullish on this 5 minute transition. 5 minute, they waited until that next 5 minute candle to slice your support, and or it would hold support, right? Those are things we look at. Now, what we do is we be looking at the high side now. So now that all the stuff got taken on the long, you reverse your logic and you're gonna watch from the top side down, baby. Sorry, 1 second. Again, this thing, it just doesn't make sense. Remember, guys, we just came up and filled that gap, right? So again, gap is filled. So a lot of the whole reasons to be long bias for many people in the market up to fill that gap's been completed. So you got to think too, that 1 and that 5 minute stuff we just showed. It's like, oh yeah, we could hold a little bounce here maybe, right? You got to think, right? This is 1 and 5 minute levels battling against a daily gap fill where the long has started from a low of $511.20 to $562. So we just ran from basically call it 510 to 562. And then when we go to a 1 and a 5 minute chart, and I'm showing these little 1 and 5 minute setups, think about that. You're battling 1 and 5 minutes against a 50-point run on the daily chart into resistance areas, right? So you got to think about things like that. So now that we've ripped down, we would reverse the logic and we would just look for everything bearish pop to short from this high down. And that's it. Kind of want to double check the VIX here too. No. Obviously the VIX is juicing. All right, so also take what the market's doing. See that? All right, what's the market doing? And the VIX is positive, right? VIX is pot. You guys get the point. You guys know we've already hammered that 1 trillion times today. I'll dabble in a little bit of everything, equity, options, futures from time to time. It just depends. But yeah, do a lot of currently these days watching a Bitcoin, buying a Bitcoin. As I've gotten older, I've become slowly less of a trader, more of an analyzer and an investor. Because I've come to find that most of the good stuff, I mean, as times change, I mean, like my partner Brandon, who runs our live trade room, he is significantly better. I mean, I think the dude's on like I don't even know, like 175 days green. So it's so impressive the type of skill set he has when it comes to the intraday and the day trading that pretty much put him in charge of that aspect of the company because he's just too damn good. And then like for me, where I've noticed that I do a lot better is just looking at, you know, as time's progressed, I do a lot better at some of this longer term stuff, like this weekly here. Like for example, like this dip, right? So like for me, I was ready for this dip and was able to get long this dip, able to get long this dip. This is where I added back to my long-term portfolio was in this dip here. Sorry, hold on. That's where I got long back into my long-term portfolio. Then I added some on this dip, and then I added some on this dip. Because I've come to find that a lot of the long-term stuff is where a lot of the bigger market performance can happen. Obviously, right? So just as the years have progressed from 20s into, you know, 30s, I've gone from less short-term to more, that's not entirely true. I still look at a lot of short-term stuff, but I just know that where I think performance for me is a little easier is on a lot of this long-term stuff. So I was looking at like dips here, dips here, dips here. Well, that's not entirely true because I was also looking at dips here and dips here that were incorrect. Well, they're right, but still wrong. And then that was our major dip there. Yeah, as I get older, I don't like fighting the market as much. And then again, like I said, Brandon, my partner for our company, is just so much better that I've just put him in reins. I put him in that leadership role on our paid service just because the kid almost doesn't miss. It's kind of ridiculous. So you got to recognize your strengths and your weaknesses, and that just is what it is. But yeah, seriously though, our my business partner Brandon, he's probably on, like I said, I think he's on anywhere from like 160 to 170 days green trading futures. Just absolute sicko stuff. He's like a robot. So, I mean, like I said, it just doesn't even make sense sometimes. Also, we just hit the zero fib of the overnight gap fib. You're getting a little hesitation there, kind of to be expected. This is actually probably, like I said, I'm going to do some 1 minute stuff just to kind of show you guys, how the market is just fractal. So remember, like I was just showing you the weekly stuff and, how you can look for dips and stuff on the weekly. It's kind of the same logic here on the 1 minute, right? So like when we look at this 1 minute stuff, we kind of expect that at some point we're going to come back and start attacking some of these 1 minute volume weighted average prices. Sometimes it happens sooner than later. The only time it doesn't happen like quick is when the algorithms take control of the sell move and just keep resetting it lower. If not, there's a good chance we're going to see this market come back and attack, up to this zone right there. I'm going to delete this one. I'm going to change this to yellow. There's a lot of green going on right now, so I'm going to change this puppy to yellow. All right, so that yellow box, good chance we come up and even retest that. Yeah. It is kind of interesting, though, because the 5 minute got crushed here, so there is a possibility, too, that they would run resistance at the 5 minute snap, so preventing us from getting the yellow. They might only run the 5 minute breakdown, which would be like right about there, and I'll change that to yellow. Maybe I should set that as the preset. I thought it was, but maybe not. I don't know. Hold on. Style, yeah, okay. Now, we would also look at something like this too. If this bottom, even on sort of like the micro scale, is legit, then obviously the market's going to probably push up, hit those yellow boxes as we've already touched on. And then, a lot of times, like again, if the micro is legit, we would hold. We're either going to run to targets or you pull back prior to and then hold a higher low. So like right now, the 1 minute higher low development would be here on the micro scale, and I'll change this to something else. I'll change this back to green. I don't know, blue. All right, so there's our 1 minute higher low development. So we would say if this bottom is legit and we were supposed to even consider going up to here, any of these levels, then on the micro scale, the 1 minute pullback would have to maintain here, and that's also an expected pullback level of the bottom. Because of everyone that got long on this bottom, we have an average share price of about there. So what does the market do? It likes to basically screw everyone over, try to put everyone on tilt. So what better way to put everyone on tilt that bought the bottom than to pull it back to their average price? If it fails the higher low, we swing them right back to lows, and then they lose their money. If the higher low holds, then obviously we can, do whatever. But I know that's a lot to take in, and I know there's a lot of, oh, well, if it does this, it does that. If it, I mean, but this is the market, guys. I mean, this is just basically, there's no other way around it, right? Now, again, I'm just teaching you very kind of small, minuscule stuff, but you got to think, right? Look at all this. Think about all this, like, micro stuff we're doing. All right, this is all very micro stuff we're doing. But in the grand scheme of things, remember where we're at, right? So the daily up, daily gap fill, right? So we've already hit longs into daily gap fills. Look at where the market's at from here to here, right? So I'm not really surprised if, you know, the thing drains out, doesn't really, you know, hold these little mini micro supports or anything like that, or retrace to some of these levels, right? It's the typical, this is how the game goes. See how we took out the blue box and just instantly flushed back to lows? That's because the 1 minute micro higher low failed. Once it fails, what's it do? Go back to lows, right? It's pretty common stuff here. All right, so now what's next? Now we're just going to chase the market down. Since it failed to retrace these levels here, right, and it put in a false bounce here, now you're going to do this. All right, you don't have to do any of this, but this is just kind of fun to at least do on micro stuff. All right, so now you're going to take this last high, right, and we're going to run it like this. And now we're going to say that this is where, if this top was legit, the market's going to bounce back to right here now. Sorry. Market's going to bounce back to here. This little 1 minute guy. And that's where the new lower high should start. Right about there. Right? So bounce up. Kind of missed it and back down. So the point being here is that since the market was unable to, say, retrace some of the high moves that we're looking at, and it started to fail right here, this is a new lower high development. And now we're going to take the volume weighted average price of this high and we're going to run it down, right? And until we start taking out, say, this yellow box right there, until we start taking out this yellow box, none of the stuff on the upside here is attainable. All right, so any of this stuff up here is unattainable until you break above this little mini yellow box. Because you're going to notice you're going to have to start taking out some of the sellers that just pop back in here. And then again, all the buyers that came in and all the buyers that failed on the high or low, they all got about an average share price right there. So everyone that bought this bottom, they're underwater. Everybody who shorted this top, and again, it's all about right about that red box right now. It may be even a little higher than that, right? This is adjusted down like that. So remember, all we're really doing is just tracking, again, volume weighted average prices of everyone participating in the market, right? Some would be like, oh, well, look at all these lines, just follow price action, which is true, you can do that. But I like to know where everyone's been participating, all their key volume levels, and in doing so, you know how someone's going to be affected in the market, right? Like that little 1 minute higher low micro spot, we knew if that didn't hold, the 1 minute micro scale would get stopped out, right? Same as here, right? We can kind of see where the volume weighted average prices of everyone that kind of shorted this last pop, their average share price is right about 5 right here, this red box that I'm moving, right? So as we start popping that, they get taken out, right? Now, you may not be able to use all of this in real time for necessarily like perfect trading, but you know, like just like right here, like, okay, it popped, like what am I going to do with that? But at least you know who's getting taken out, you know why they're getting taken out, and so on and so forth. Again, one could simply look at price action and just assume like, oh yeah, like obviously if the market goes up, then we're going to take out shorts. Like, duh, right? But look at that, right? There's your move right to the blue. Now, obviously, if the price of the market goes up, then obviously it's going to hit the blue, right? Like that's a no-brainer, right? But to people to expect that and know the levels prior to them even occurring comes from tracking the players in the game. Right? So now we may be looking at this transition into the yellow. There's no guarantee it's going to work right away, but again, we've already hit the 5 minute snap level. The next ones on deck are going to be the yellow box. But anyways, here's another thing you have to remember too is this is 1 minute stuff. So for example, let me explain it this way. If the top-down selling trend is going to continue to hold bearish, then minimum you'd want to see it stay below the yellow box, right? Or yellow zone. Kind of like here, you see how we hit this 1 minute VWAP, right? And then it kind of rejected, and then we transitioned to the new 1 minute candle. All right, so that's kind of what we look for. If we're looking at 1 minute VWAP stuff, like, let me rephrase this. If we were expecting a lower high at a VWAP level on the 1 minute, the general concept is we wouldn't expect it to instantly slam on the candle that reaches it, but possibly on the new 1 minute candle. All right, so market goes up on the 1 minute trend into 1 minute resistance. We don't expect the market to pull on the VWAP on the first 1 minute that touches it. We'd expect it as it transitions into the next one. Kind of like a daily VWAP support or a daily VWAP resistance. If we hit daily or even weekly, weekly's better, right? If we hit a weekly VWAP support, we don't expect the market to reverse this week. We expect the transition to happen into the next week because this is a weekly support. Though it's a big support, it doesn't mean we reverse a red week. It means we transition positive into the next week. Here's your pump. Probably going to go get that yellow target, first side of it. Unless they do some scam or some bullshit. So what I'm going to do is I'm going to take out this blue one. We've already gotten that one. I'm going to clean up the chart a little bit. I'm going to take off all this bullshit on the bottom because we've already done all that, right? And now what we're going to do is what? We're going to run up a 1 minute now. So now I'm going to look at a 1 minute from this low. Run a 1 minute from this low. We're going to run a 1 minute from these low right there, right? And this one's kind of, well, hold up, because that's down. I mean, this one's kind of funky. I don't really like the way this is all set up, but this would be it. Again, this isn't the best example. Just the way it's set up's kind of odd. But yeah, so this is where we expect our 1 minute pullbacks to be into. Basically, what it means is, right, we run up, find resistance. If the resistance is good enough, you expect possible dip into support like that. Again, this is all we're playing with so much assumption and trying to predict every single movement. But again, it's all pretty straightforward, I guess, at the end of the day. You just kind of have to be patient and let things work, and you'll see how the market flows in between all these levels. Real quick, in the chat, is any of this making sense? Is this too confusing? Is this, do you think, unnecessary, not needed to know, not helpful? Let me know. Don't be shy. I've only sat in here with you guys for the past, I don't know, how long has this stream been? Like a couple hours now. So I'm not shy with you. Don't be shy with me. Well, I'm happy that it makes sense for at least one person here. That's good. That's good. Alrighty, folks. Looks like we're about to get that yellow box target. Now, remember, this we set those targets, you know, about 20 minutes ago. It didn't mean they had to hit them right away, but again, it's knowing where the market can retrace. Yay! There's the 1 minute long target based off of the key volume trend from the highs. Now, if we break out the 1 minute, we're going to transition back into the 5 minute. So we might need to hesitate here, see a little resistance due to just a 1 minute trend. We'll see. If nothing is to be found, we're going to look for the pump to continue into the price of 560.49 and 560.85. You heard it here first, folks. And on that note, I'm going to go refill this coffee. Alrighty, we're back on. Alright, so look at where this, see this red box? See how it's no longer the same? It needs to adjust upwards because the volume weighted average prices have adjusted. And then also, we have a new dip on the 1 minute scale, which would then also mean we would start some new ones like this. I'm just gonna do this. Oh, snap. Hold up. That's right, this thing's dumb. Like this, and then I'm also going to do the breakup candle here, but oh, that's so stupid. It's being weird today. I don't know why. I'm going to take off this old stuff right there. I don't really need that. And now we expect the first 1 minute pullback, if there is one to be found, would be there. So it's basically either the 1 minute pulls back and hits these red guys, or we're just going to blow up into this yellow box. Obviously, right? How dumb does that sound? It's either going to go up or it's going to go down. But I mean, anyways, you get the point. You can kind of see, right? So if you look at this, look at the 1 minute high here. So we're going from the absolute high where the red started off highs. You can see how we've taken that out. And we're just barely flirting over it. This is, this is the game, right? So it's basically anyone shorting this high is not going to win unless the algorithms and the volume allow it to break below that VWAP. If anyone shorting on the 1 minute fails to get it below here, they blow themselves out into the yellow. And the longer they sit dangling it there, the more likely it is to happen. Let's just double check and make sure I'm not missing something here. It's actually a little higher than where I had it. There you go. Oh, I gotta adjust this back. Okay, there we go. That was a pretty shifty candle right there, eh? That's a perfect candle to trap someone back in a short and blow them up. We'll see. Again, I don't make the rules here. I can't predict everything, but I don't know. That was pretty dirty. So I don't know if it's legit or not. Actually, I'm not even looking at any momentum stuff. But again, that's kind of what we're looking at. Is you first gotta breach that level, or else this short is not going to work. So anyone shorting this top, again, I don't know who is, but you know someone is, but so whatever populist group or population group in the market shorting here, if they for whatever reason can't get this market down below this level, then they just probably further push themselves out, like I said, up to those yellows. And if we do take it out, we should basically fall right into about this red zone. That's usually the common outcome. Sometimes it doesn't always work perfect, but in general consensus would be down to there. Again, another little shifty scam candle down. Make you think it's going to drop, and then they close it right back above the key label. Also, looks like the 1 minute 50 SMA is breaking up. So 1 minute pre-market trends getting a little pause. Let me double check our regular trading hours. Wait, is that right? Hold on. Yeah, it should be. Regular trading hours to pre-market ain't much of a difference, surprisingly. It's weird. 5 minute trends positive. So yeah, not to mention we did a 5 minute trend breakdown, then back long. So basically the 5 minute trend of the SPY went back to positive down here about 599.40. So 5 minutes positive, 1 minute arguably trying to get positive right now. Again, I don't really put a whole lot of emphasis on the 1 minute trend for SMA stuff, but you know. What time is it? 11:19. So we got 1 more minute to a new 20-minute candle. Oh, man. Oh. Thank you, Raphael. Appreciate you, homeboy. Jedi Cred. Yeah, so my business partner, Brandon, runs most... I mean, I obviously do work, but he runs most of the live streaming on our private side. But a lot of the approach is still the same. There's a lot of different stuff as well that's in the private. Not that, you know, it's just material and stuff that my business partner Brandon has developed on his own, you know, so we kind of do a mix of mine, his, to try to best analyze and attack the market each day. So for anything kind of intraday, as far as our private group, you're mainly going to be working kind of on a live stream with him and me. We're not exactly sure how, again, I would love to be doing more like streaming onto YouTube like this, but our streams haven't worked for a long time. So there might be some changes, but if you would like, hold on, let me get you a link. No pressure. 1 second. Here you go, copy. But yeah, if you'd like to join the lives each day on the private side of things, where my business partner Brandon throws out many live trade examples and trades, and you know, prior to and pre-market, you can join us there. If you want to hang out and just do some free live streams, like here, I plan on being here a little more frequently than I have in the past, but that's primarily because for whatever reason I couldn't stream. But today I got lucky, so there's no promises that I can even stream tomorrow, but hopefully we can. Alrighty. Again, you can kind of see, you know, we pretty much pulled back that level, not quite, you know, we're kind of rolling down, so Again, you can see where you actually can see it too. You see how we got below it and started to shift a little bit. See how we snapped it, closed below, kind of shifting. So again, this is all very, micro stuff. So you're not really looking for things to be perfect, but you know what I mean. Those are just all little finite details that you can look at. Oh, what do you know? We hit the 1 minute pullback target. I mean, obviously, because if things go down, then obviously you should hit that level, right? Like, it's kind of funny, though, analyzing markets and saying things. It's like, well, obviously, if it goes down, it's going to hit a level on the downside. And if it goes up, it's going to hit a level on the upside. It's kind of comical, actually. But, yeah, it's fun. So, we got to adjust this bottom one here because levels have changed. So just in case, we update to new volume weighted average price zones. That's another thing why I would definitely say, again, I'm not going to say I'm perfect by any means. I've had great years of trading and terrible years of trading. But, over the years, you pick up on a lot of this stuff. And so one of the things that have made me better at looking at markets is realizing that it's an ever-flowing, ever-changing ecosystem. And it does not work on a kind of left to right horizontal fashion like most of us are taught when we first start. Everything is updating, everything is changing in real time, just like these levels. You see how I've moved these boxes a few times? So that's also why it can be very hard for, say, like an alert group or like an alert service. Not saying that you should be following that or that's, the bread and butter of the market, but just like take an alert service, for example. It says, hey, buy when it gets to this price, right? Well, for me, a lot of the prices are continuously updating and changing. So like if I say, hey, look for a long here at this price, and that was an hour ago, well, now the price has already changed and you should be looking long at a different price point. So that's a lot of times why I, in my, I guess you could say professional opinion, would not assume, but I think know that that's why it's really challenging for you to sign up for just say a service that's going to send you an email of maybe when you should be looking long, because these levels can update so frequently, right? So really the only thing I'm really even comfortable about, as far as like, I'm just getting off topic now, but you see what I'm saying. Prices update, prices change consistently in the market based off of moving average and key volume trends, and nothing is static and stationary. It's always ever changing and evolving, and the better you get at kind of evolving with the market as time progresses in the chart, the better you'll be able to be on the right side, essentially. All right, so we can obviously see where we've got some resistance, and now they've kind of snapped this level. So unless they pull some random gimmick here, we should expect the market sells down into this red box here. Again, it might be too soon to tell. This is all 1 minute stuff, very micro. Let me double check something else here too. 5 minute trend is way down there, but yeah, so this is also, I'm going to add this just in case, but this is also our current 5 minute trend support for the time being on the SPY. Now there's other markets that matter, like watching the Qs. Like for example, like a QQQ level could be taking precedent over the SPY, and I'm not watching all that right now. I could, but there's just no way that I could effectively show all those screens and all this detail on both and probably have it make sense for you guys. I'm gonna drink some of this coffee here. If you haven't liked the stream, make sure to go ahead and like. I don't actually know if you liking the stream is gonna make it more popular or not. But hey, maybe it will. So if you haven't liked it, I would really appreciate you to like it, and then send a comment. Or can you even comment on live streams? Maybe. I'm getting old-ish. Okay, I'm 30, almost 31. I'm not really old-ish, but kind of feels like that in the YouTube world. Allie Johnson. Well, thanks for loving the content. Really appreciate that. I've actually been slacking on that. I should be doing a lot of updates on that thing. So yeah, it's supposed to be updated, but it's not. There's a lot of VWAP stuff I need to add in there, a lot of fib stuff I need to add in there. So for the time being, it's not quite up to speed, but I do intend on doing that at some point. Again, just kind of, I always say that's just kind of been busy, but but yeah, I definitely need to take like a week and really take it serious and sit down and kind of get a lot of this material into there. But again, we do a lot of private stuff always and what have you. So a lot of times that's taken up some of that, but for sure that will be updated here fairly soon. There's still a phenomenal amount of content in there that is very valuable. I don't necessarily teach a lot of like the just straight raw price action stuff. I know a lot of people just love raw price action, fair value gaps and all that. And they basically swear by just only price action stuff. Mine's a lot of can be indicator based, statistics based. What will soon be added into there is a lot of volume weighted average price based, Fibonacci based. And then at some point I'll probably do some sort of raw price action material, but I just haven't as of yet. If you were to learn options, and this is something, there's a new channel we got to kind of set up. I am not like an options pro. I mean, I'm more of like a levels pro, as you can see. I have always took interest into hopefully being able to pinpoint markets, bottoms, kind of tops, where things can transition, where they can go to before it happens. That's where I found a lot of interest, and what kind of gets me going in the market is basically trying to take the hardest thing, which is predict what's going to happen before it happens. That is probably the hardest thing to do, I would say, along with, anyways, so that's where I've kind of found interest, is being able to look at a market and go, hey, I believe that this is going to happen next, or this should happen next, and then give a price of how it's going to happen, how it's going to unfold. Not that I'll always be right, but by driving myself to figure that out, I've gotten what I would say very good at being able to, essentially predict a lot of things that can happen prior to them happening. That's what I found, interest in. And so that's where a lot of my work and the things that I have built or have used come from, is trying to be able to do that. So your question with options, right? I have never been one that dove into options far enough to learn like different strategies, whether it be butterflies, iron condors, Texas bulls, Texas bears, et cetera, et cetera, et cetera. I know some of them and I could set some of them up, but as far as, being the master of teaching that, I'm not. Now, our business partner, Dave, surely is. He's one that could take you through and through everything options related. I would say it's not the proper kind of channel set up for him yet, but on our new site, I am looking into kind of creating an own space for Dave on our platform that he could handle that sort of thing. So to answer your question, we do have a gentleman with us, Dave, family friend, who's been in the options game for probably longer than I've been alive. Probably longer than I've been alive, to be honest. Well, maybe not. He's probably been in it for like 25 years or so. So probably since I was like 5. So as far as like teaching how to build strategies and kind of things around options, Dave would be that guy. So I would say I'm like the targetable predictor, analyzer. Dave is more options, strategy based. And then Brandon is pretty much dead nut, intraday futures trader. So I'd say it's a pretty good mix of everything. Yeah, you know what? Let me, here, send me an email. Let's do that so that we can create like a chain of communication outside of just this chat. I'll post it into here. And you guys can feel free to email me here whenever you want to. This is my company email. Did I do that right? I don't know if I did. Hold up. I think that's correct. Let's see. Yep, that's correct. Yeah, so Racer Todd. Hold on, let me answer this question. Racer Todd. Yeah, so yeah, so what you're talking about is like confirmation, which can all come in the form of higher lows, lower highs, etc. Momentum, things like that. Also, I would say it also comes down to, excuse me, sorry. Yeah, it also comes down to like confidence of a level, right? So for me, like for example, I'm gonna take, I don't know if you were here earlier when we went over this, but one second, I'm gonna take us back to some other cool stuff because now I don't really, we're just kind of chilling. So let's go back to here. So I'm going to show you guys this one. So basically, and again, what I'm showing you, I hope doesn't end up fading as far as how good it works, but there is a reality. The more you show something in the market, it is true, the less it works. But just is what it is, right? So nonetheless, here we're going to take this low, we're going to take this guy right there. All right, so you see these VWAPs I added. Do not pay attention to any of the price action this way. Forget all of this for now, right? Just forget it all, right? So what we're looking at is right here. This low point right there. Those two VWAPs. I just made a zone just to kind of overlap where those VWAPs are at, right? So I'm looking at this previous dip in the market. So the market's going up, and then all of a sudden people sell, and then people buy, and then the market goes through a rally. I'm taking the volume weighted average price of that dip, extrapolating it, pushing it into the future, and expecting support somewhere in that area. All right. Now, the look of this chart clearly says, well, Connor, you were wrong. That wasn't support. You're right. If you're looking at this weekly scale, you're correct. The support ends up breaking. But if we dive into a shorter time scale and look at the market there, one second, extended trading hours. Oh, I need to make this way bigger. Hold up. It would be right there. There it, oh, darn it. Sorry, I know. So it's right here. And I'm going to delete these green lines. So remember, we were on the weekly scale, all right? And the weekly support level that we determined was right here. And I'm going to shrink this over this way because this is where it's at, right there. That. Just that, right there. So based off of our longer term weekly trend and weekly scale, I myself was able to come up with a weekly support right here. So when you're asking me like kind of about confirmation and things that would make me more comfortable on a trade, for me, a lot of it will come down to bigger levels. Weekly levels, something where I know that even if it doesn't work right away, or I'm in a very low risk, higher probable environment, right? So that would be something. So when you talk about like confirmation or confidence, a lot of times it can come down to the level that's being traded at or the level which we're interacting. All right. A lot of the stuff that you just saw us doing, like on the 1 minute, that's all kind of like, I don't want to say maybes, but it's just, there's just not as much confidence because it's smaller scale stuff. So we know that the follow through may not be as big, right? And so on and so forth, right? So talking about like confidence intervals, this would be one there. That's a weekly level, right? The weekly level prior to this one was right here. It was right in that bottom. This may not be perfect, but it was about there, right? So that was the weekly level prior to this weekly level. And then the most recent weekly level we were watching was right here. Oh, sorry. So these were in this last downtrend. Gosh, dude, stupid. I don't know why it's not populating. It's just ridiculous. Oh, I see why. Because I'm a dumbass. Because I'm hitting the wrong one. That's funny. All right. And then the most recent weekly level was right there. Actually, it's just there. Okay. So as far as like looking for long dip bottoms in the last downtrend, these were all of the spots that we recommended watching for longs, right? Was this low, and this low. Our first two bottoms did not create the big rally. Our third one did, right? But as far as you asked me about like confidence, like I have big confidence when it comes to big levels, like way bigger levels, right? Because I know that could be kind of a seismic trend shift or bottom, right? So that's where it comes for me as far as like confidence levels and things like that. Yeah, because I know from past experience that a lot of times the follow through around some of these weekly levels can be, significant in comparison to like a 30-minute or a daily. Keith, yes, I still believe that too. I still believe maybe that was it. I guess so. You can never know. Maybe it was, some of the other stuff I shared or talked about or what, but who knows, right? But basically, for the past couple of years, yeah, they just removed subscribers from our channel, and our subscriber growth is negative every single day. They didn't demonetize, but they crushed the monetization on the account. But who knows, right? I mean, I couldn't tell you. I don't know for sure, but I have assumptions. There can only be a handful of reasons as to why. I do believe another one was statistics. I believe we started teaching, a pretty good thing as far as statistics go. Just like, for example, like the most recent one, the SPY. Right? And we look at the SPY here on the weekly. Oh, wait. Why is it not populating one day? That's weird. Okay, there we go. Yeah, like on the SPY on the weekly, like just the other week, right? So look we were at -1 and weekly VWAP support, and we're like, hey, this is where you should be long. And then a regression trend takes you all the way back here at the 10% gain, right? So, it's like, I would say we would definitely teach things that are outside the norm textbook of the market. Not too different. I think a lot of it, that's a lie. A lot of this stuff is known. A lot of this stuff is used by many people. But, we don't, I would say we don't tell you, hey guys, look at this you take this level and you put it here, and that's resistance, and that's resistance. We don't do that, right? That's what the market wants you to think. We teach you the opposite of what it wants you to think. Right? Like when the market's trading at -1 standard deviation, there's a 70% chance it's going to bounce, right? Or it's, so on and so forth, things of that nature. So I guess I couldn't be for sure positive, certain, or one way or the other, but, regardless of that, no point in talking about it now. So yeah, we still use a bunch of statistic stuff. If you go to my channel and whatever for years back, I mean, this is all the stuff we worked on back then. Now there's some new stuff we use. So yeah, I may not present this as much, and that's only because it's already been taught through and throughout a million times. And so now we're kind of working on new stuff, right? And new strategies and other ways to analyze the market and look at markets and have ideas of what things may happen before they happen. So like you may not see this on my chart, I may not be showing it to you, but it's always running in the background on one of my 6 screens, So like these are key volume levels, right? So like if we take this, right? So watch this. So wait, is that right? Hold on. Yeah, I think that's right. That is right. So basically, if we look at the market here, this dip, I'm gonna put a little box there. It might be hard to see. This dip, and then this dip. It's not working. Oh, sorry. Wait, or maybe it is and you just can't see it. I don't know. Yeah, it looks like it's there. You can't really see that one down there, but this this dip was a weekly support. This dip was a weekly support, and this dip was a weekly support. So we basically pinpointed every single bottom in the downtrend as it trended down to a statistically oversold value point. Then the market picked up aggressively, right? So it's not that we for sure knew it would go down to -1. It's common that happens, but we do know that as markets retrace, they're going to test weekly levels, and then weekly levels are going to be tested as kind of support bounces. So yeah, whatever that means. Bro, you know what's funny though is the US economy adds 118,000 fewer jobs than initially reported. The most important question you have to ask yourself is, who are the dumbasses that report this? I mean, like, and the reason I say that is, I mean, how can a company... Nope, I should stop there. This is the type of shit that always gets me in trouble. It's too good. I can't. You just gotta ask yourself, how does someone miscount 818,000 and then come out a couple whatever weeks later and be like, oh, sorry, we made a mistake? They've done this. I can't tell you how many times they've done it because I don't even pay attention anymore, because it's a theater. It's comical. But this is not the first time they revise the jobs numbers down. So it's like, I don't know the exact number, but I do know it's been multiple times. So we'll say this: 5 times in a row they've had to revise the jobs numbers down, meaning they prior to that they reported higher numbers than they actually were. And now they've done this 5 times in a row. So one that has a brain says, we made a mistake once, twice, 3, 4, 5. At what point do we learn how to better not make the same mistake over and over and over and over and over? Unless it's deliberate. So again, it blows your mind just how deliberate it all is. So cheers to that. We'll get off that topic. But again, that's another one. You just gotta look at it like, oh my gosh, it's crazy. Like, these people somehow reported jobs wrong by 818,000 5 times in a row. So should we even be paying attention to anything that's reported? Probably. I don't know. It just I don't know. Makes you wonder. But anyways, I don't know anything. I know nothing. I'm just some rando. Okay, so what do you guys want to talk about now? Remember, there's really no, like I said, what do we want to talk about? Because we know there's really no point in talking about any of the news that comes out, because we know that the news is all built in a way that is just there to further progress the market in favor of buy and sell operations. So when the market's in a buy op, we don't really need to read the news, because we know the news is predominantly going to be positive to help favor the buy operation. When it's in a sell operation, we don't really need to know about the yen carry trade bros, because we know it's just going to be negative because we're in a sell operation. We also know that we don't really have to look at data outside the reasons for just wanting to know, because when we're in a buy operation, the data is going to come out and they're most likely going to press it up because we're in a buy op. So regardless of the data being wrong by 818,000 jobs, the market still goes up because we're in a buy op. So you see what I'm saying? You know what I'm Ellie Johnson, do we have a Discord community? Yeah, we have one of those. Thanks, Racer Top. Appreciate that. Yeah, I'll take a look at NVIDIA. So yeah, NVIDIA will have the same... NVIDIA's going to... I will give the same spiel on NVIDIA as I pretty much do everything else. Ready? Watch this. So let's first go to the SPY. Okay, I'm going to drill this into your guys' head every single stream. And then the more I do, the more you're just gonna be like, oh, it's just a big old game that just repeats, right? Okay, so look at this. See that vertical line? That vertical line is where the buy signal, actually that's wrong. Well, I mean, it's right. But anyways, this vertical line, that's where the buy signal operation starts on NVIDIA. So if you had asked me, say, a couple weeks ago what I think about NVIDIA, my answer to you would have been, which I gave to many people in another Discord, not even my own, I just went to some other random Discord, and someone there asked me, when should I buy NVIDIA? And my entire response was, you should buy NVIDIA when the market enters a buy operation. When does the market enter a buy operation? When it gets positive over its macro 30-minute trend in general. Not perfectly every time, but as a general consensus, yes. So this is the buy signal operation on the SPY. It takes place when? Thursday, August 8th into August 9th. Let's go look at NVIDIA. When does NVIDIA enter a buy operation and go long? Thursday, August 8th, August 9th. So what do I think about NVIDIA? I think that we missed the buy operation on NVIDIA because it happened on Thursday, August 8th, when the market went into a buy operation. What do I think about right now? I mean, I don't really have a whole lot of thoughts because I would need something to be triggered or a change in direction. So I can't really tell you to be bearish because we're not in a sell-off, right? So like if we look at here, right? So you break, start, 1 second. So as far as NVIDIA, I'm just kind of neutral. Why? Because NVIDIA is not breaking down the 50 SMA, so we're not going to a little bit of a sell-op. We're not breaking over the 50 SMA, so we're not going into a buy-op. We're not breaking below the 30 minutes, so it's not a sell-op. We, a couple weeks back or whatever, broke over the 50 SMA with the market, so we went into a buy-op. Market's up 28% or 25% since the last buy operation. Allie, so again, we do a live stream every morning in our private group Discord, which is really, it's a paid one. So it's not like we're actually, like, we use Discord as a chat, but we stream on Zoom. And so we do that every day. The only reason I'm here today is because I got a YouTube stream to work. So I'm like, hey, Brandon, I'm going to stream on YouTube today. But I might be here more frequently. But yeah, so I'll send you a link. 1 second. I don't know if I still have it. Yeah, so there's a link to our website, then you can go there and enroll if you choose. If not, there's no pressure. Honestly, again, no pressure, but I am going to try to be here a little more frequent on YouTube streaming. So if that's something that you want to hold off on, it's something you want to go forward with, great. If not, I will try to be here a little more frequently as well. So yeah, this is the other thing I will say. Buy and sell signals don't work as well on individual stocks as they do the SPY. So part of the reason that this buy signal here on NVIDIA works so well is because it pretty much occurs at the same time that the SPY goes into a buy operation. So it's kind of like, it's the fact that the SPY kind of had a really good operation that you saw a really good follow through on NVIDIA. Simultaneously, NVIDIA is a big market cap stock, so it's kind of like the fact that NVIDIA performed so well is why the market performed so well. So it kind of goes hand in hand. But also at the same time, let's go through a bunch of different stocks, right? So let's look at Apple, all right? So when did Apple hit a buy operation? On August 7th to August 8th, right? So let's do a vertical line here, Alt-V, right? So when did Apple go into a buy operation? It's basically same date the market did. Let's look at Amazon. When did Amazon go into a buy operation? On August 7th into August 8th. When did Meta go into a buy operation? Let's see, August 6th, 7th, 8th, right about there. See, you actually can see Meta was like not following the market, kind of like popping before, dropping. So again, when it comes to individual stocks, using buy operations based off of 30-minute open, high, low, close trends can be a little bit more tricky because it's not as it's one stock versus 500, right? So 500 stocks can be a more clean representation versus one. So essentially there's more volatility. Let me put it that way. An individual stock carries more risk and volatility than does the SPY. So a buy or a sell operation happening on the SPY is a factor of 500 stocks. So a better representation of the operation versus one individual volatile stock going above or below a specific level. Now when we look at Microsoft, right? So what about Microsoft? August 8th, boom, Alt V, right? So when did Microsoft start giving you positivity? August 8th. Nvidia, we did Nvidia. What about Netflix? Netflix absolutely cranked and banked on this buy op. And this is how the market works. When the SPY goes into a buy operation, the algorithms and the programs get turned to long, right? So here is your buy operation on Netflix happening from August 6th into like August 7th. So we actually started a day prior on Netflix. So Netflix was front ran there. Tesla. What about Tesla? Tesla, August. This one was a little lackluster, a little slow. But that's also because the world has it out for Elon right now. So not surprised, right? So Tesla was a little lackluster on the pickup there. That's because he's got a target on his head. All right, we're going to go to AMD here. AMD, delete, remove drawings. AMD, August 8th, turns positive over 30-minute and rips up. So this should give you a really good representation that the entire stock market is one big organism and ecosystem that goes hand in hand with each other, with itself. So when someone asks questions like, what do you think about NVIDIA? What do you think about AMD? What do you think about this stock? It depends on, what index they may be a part of. So are they a part of the tech or NASDAQ? Are they part of SPY? Is it a Russell 2000 stock? Is it small cap, et cetera, et cetera, et cetera? Is the overall market in a buy signal? Is it in a sell signal? Is it coming into weekly VWAP trends? All these things. The market is fractal and it's a ever-changing organism, right? And so it's very challenging in that regard. But one thing that becomes clear the longer you look at these things is that it is one big market and it is one big ecosystem, and one thing feeds off another. Hence why when you go through all the big major market cap stocks like we just did, Amazon's, FANGs, Tech, all that good stuff, how you can see that they almost look identical to the market when they all go into a buy operation. It's all around the same date. And then it makes you think, well, how does that all occur? Because it's an algorithm, right? And that's how the news works, right? So again, if you guys go look at the news, all of the news for the most part of the past week is all going to be positive. CPI better, PPI better, who knows, whatever news, right? Whatever they come up with, right? And I got this on Twitter. I'm going to pull this up real quick. I'm going to try and find it. I can probably find it pretty quick. I'm logged out of Twitter. That's right, because I'm not going to post to Twitter anymore, so I'm not going to Twitter. Yeah, so, what you end up learning is that, with the news is programmed around the buy and sell signal operations, right? Now, one might ask, is it really programmed, or is it just the sentiment of emotion? Which could very well be true, but I have to believe it's otherwise. I believe that it's programmed. So, again, taking this vertical line, moving it to here, all right, right there, that's when the market started to break down, go into a sell move. That's really when they started pumping you with the yen carry trade, fear, world's ending, you're going to kill yourself because the world's ending, and whatever, right? Those are probably words I shouldn't use here, but it's all for fun and joke. Again, joking, laugh, ha ha ha. Okay, so we'll be less doom and gloom. The world is ending. You're going to trip over your shoelace. You're going to pee over your toilet seat. I don't know, dude. You know what I'm saying? It's like, so they changed the news to terrible here. Yen carry trade fears, the market's over, the world's going to end, the world's going to blow up, blah, 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 blah. Nuclear war, this, that, whatever, right? That's because the market is bearish. And so if there are big players in the game that want to decrease the market and they're already in short, or they've already liquidated their positions, or what have you, then what better way than to start pumping the market with fear to either drive their short trades down or to drive the market down to their next buy point. Then once they've gotten their fair share. Either they're short or they've gotten their longs, which, mind you, remember, this was huge weekly support right there, which we had suggested as a long play. So the market gets picked up here, phenomenal gain, but they don't change the news narrative until the buy operation starts. So the smartest of the smart get a really good deal down here. The news still has you thinking that the world's going to end. And then a few days later, once we get positive, they start pumping good economic data reports and good news to further their bags. So if you ask me, it's a program that takes place around buy and sell operations. News narrative and sentiment will flip according to positive or negative trend direction of the market, whether it just be through emotion and sentiment, meaning obviously the news is going to be positive because what else are they going to talk about when the market is up a couple percent? The news isn't going to go, oh, the market's down 1% and you should be scared, if the market's actually going up and it's up a couple percent. That wouldn't make sense. They would have to say, hey guys, the market is up today 2% because of good economic reports, right? Same thing, if the market is going down, it's not like they're going to go, hey guys, the market's up 5% today. Yeah, when the market's actually down 3%. So they have to report that the fact is the market is down, right? And then they have to give you a reason why. But is it a little deeper than that? Is it so deep that in fact the market does go through legitimate buy and sell signal operations? And in doing so, the news will be programmed and the narrative will be pushed to further those operations in the direction that the market wants. That's the way I see it, is that the market does have a buy and sell signal operation function and algorithm based off of levels, right? And once the market is in one of those buy or sell signal operations, the news narrative will flip to further help and coincide with the operation. When the operation is done, the news narrative will flip. Right? That's how I look at it. Yeah, and so like perfect example, right? Think about it like this. The market goes into perfect support down here, right? And that's August 5th, right? So perfect support, and they locked everyone out of their Schwab accounts. No one can get into their accounts. Think about that. The day the market is at perfect support, retail shut out. How? How is that even possible? What are the odds? The odds are pretty good, I guess, that on literally the exact bottom, none of retail is able to participate. Or very, very few. There's a lot of platform issues. And guess what? Guess what they said? Oh, there's a big influx and the servers can't handle it and blah, blah, blah. And it's probably true. There probably was a big influx of people coming in because the market is getting absolutely smoked into the perfect buy. And then you can't participate. And then not to mention, they juice up the goddamn premiums on options so high that it's almost stupid to buy options right in the perfect buy. You see how they perfectly manipulate the system? So buying options on this low on that day, not that you wouldn't make great money on those, it's just funny, is that they make the implied volatility for the options on the call side so stupidly astronomically high that you don't even really want to buy them when it's in the perfect buy point. It's what we call the perfect manipulation. Allie Johnson, how do you determine a buy operation? Buy operations only occur over the 50 SMA. I'm going to take you guys back a decade, as far as I can go on this chart. We're going back as far as we can possibly go, which isn't too far. All right. Remember, this is macro stuff. This is very macro. This is very short term. This is trading. Like, this is legitimate trading. Okay, ready? I don't know, like it would basically be here, right? So look at, that's a buy operation. The market went over the 50 SMA. Until it goes below the 50 SMA, a sell move is not occurring. Okay, there's the break of the 50 SMA, right? So on this day, there's the break. That's a potential sell-op. Okay? We go into a buy operation when it goes over. Now, this doesn't necessarily always work perfect. Like, the follow through is going to be amazing. Again, this is still the market, but this is probably one of the best guides that you can use to basically understand the game, right? So when we get back over the 50 SMA, it's a buy op. There's your buy op, okay? When you get back below the 50 SMA, it's arguably a sell op. There's the break of the 50 SMA. And looks like it doesn't last long. Now we're back to a buy op. All right, continue. We're coming down to the 50 SMA. We test support, we break. Maybe a sell op, but you can see that, hold on, let me zoom in. The slope of the 50 SMA here is so positively sloped that it's hard to sell the market away from a positively sloped SMA. So let's see if it comes back. It comes back. Does it break it and go into a buy op? It's trying and looks like a potential buy op. All right. That one was a little fakey. That was, I think that was like an FOMC day. I think I remember that day. So anyways, we're above the 50 SMA, so it's a buy op, right? And we don't go into a sell op until we break it. Again, we're starting to break it, but the slope is still positive, so it's kind of challenging. See how positively sloped it is? It's hard to get a sell operation to work when below. This is also where I would look at the news. If we start to break down this 50 SMA and the news doesn't start programming negative stuff, then it's probably they don't want it to go down just yet. We'll see. Again, look at our perfect example, right? So look at how positively sloped the SMA is, right? And think about everyone shorting, right? And then watch this. Bam, right back to it, right? Because that's the key trend, okay? Now you can see that the SMA is flattening. It's getting sideways, all right? Now it's getting a little downsided. Arguably where sell operations might work better. Now the slope is down, and we've actually kind of moved away. All right, so on and so forth. So we could keep doing this all day. This was really choppy, kind of annoying, but basically the concept exists, right? There's your 50 SMA, over, holding, and then eventually breaks down, et cetera. Now look at, so we do get a breakdown, a gap down. This is probably where the news is like, oh, the world's ending again, right? So now we're into a sell operation. You can see how negatively sloped the SMA is. So you can see there that the market is going down, negatively sloped. Ready? When we get over it, there's a rejection, slight fake out. Again, when it's so negatively sloped, you might assume that that's a fake one. Again, there's a lot of details you have to pay attention to, and there's more that I could cover on this, but as a general outline, this is great. Ready? So look at what happens right there. Alt-V. At this point, I would say you can't be bearish. You have to be bullish. If the market does come back below the SMA, yes, maybe we flip back down, but for now, you have to watch long bias because we're over. It kind of gets fakey here, but ultimately, there's a snap, right? So it starts to break down. So right here, you'd be like, not sure, right? Simultaneously, look at the direction of the SMA. Right, so you break over, SMA is really downsided. So this is a break and a back test to test trend, and then it kind of just falls apart, right? There's 1 minute stuff that we track here to get a better gauge of that, but bottom line. So now you come to here, and remember that we said that this is short-term macro trading, right? So now, oh, there is break over 50. You have to be back to long bias, and nice. There we go. There's a big move, all right? Break below the 50 SMA, back test down, right? And now we're leading into, like, I think where we're at now, right? This is the mark. No, this isn't. It just looked like it, right? So again, we've had some areas where this gets a little dicey, but again, this is what it comes down to trading, right? Right here, look at, breaks down, back test down. This was just shit environment, right? And there's rules that we have for that, but anyways. So in this situation, we would take the consolidation high-low, and we basically say, until we break out of there, just don't even mess with it. So you break out, get a little run. There you're negative. Positive. Scammy, but positive. Et cetera. Look at breakdown negative. Break up positive. Breakdown, et cetera. So you get the point. So that's what we look for on the SPY. Also, right, so the 30-minute is basically the lowest that we go to consider a buy and sell operation. Then the next thing, like, there's also this. We look at 1 hour. So, like, basically the 30-hour is kind of like the trigger, and the 1 hour is kind of like more confirmation. But anyways, yeah. So there's, you know, I could go on and on and on for days, and I could teach you 1 minute stuff, and with it, and it's just, it'll become too much. So check this, ready? So remember we're talking about, like, basically we're going to take this guy and we're going to watch the market retrace into the top down 1 minute, top down 5s, etc., etc. So pretty much gets over, couldn't break, holds down, right? Now what? Now we would do this. We would go from here on the 1 minute scale. Here's our 1 minute down. Ready? See how it never retraces to that one? That means it's still open for business. But since we never retrace, so like for example, instead of retracing to the top down 1 minute, you get this little bounce that doesn't hit it and sells down. So what are we going to do? We start chasing it down. Ready? Watch this. We're going to take this guy. Oh, stupid. Once again, just being dumb. Okay, we take the top and we take the split right there. All right. So there is your next lower high. And we would take this guy here and we would go boink and a boink. All right, and you can see where we've retraced, and now that's the lower high, etc., etc. And if we break this out, we're going to get sucked up to this 1 minute here. But right now, all of the resistance based off the current trend is right there. So like that's another tactic, is taking down. I should find a good downtrend day. Let me see if I can find. That would be a good day to watch, to show you this. Now, one might go like, oh, you should just look for retraces the previous breakdown. Like, whatever way you want to do it, right? So, like, right here. Oh, so dumb. It just doesn't make sense. All right. Which is, it's arguable, I would say, because realistically, that's the split. So we don't need to chase this one, but it'd be like this. So you look for a pop here, cool, you get that. Then your next one basically be like this, down. And even this one doesn't, right? So you kind of see they fail the retraces. When they start doing that, that means an algorithm is forcing the market down. All right, so then we go to like this split, get that high. We'll go to this split, gets this high. Then we go to this split. Or not, because that's just dumb. Let me take this guy, go to this, stupid. Go to that guy, take this guy down, get to run the split, etc., etc. And that's kind of how you can get a gauge. This may not be the best example, I'm going kind of quick, but it's how you can kind of get a gauge for, you know, where 1 minute retraces are going to be and so on and so forth. There's a lot more to it. I could even show you, like, for example, I mean, I could go to, let's see, right here. What's the difference when I mean, you just said it. The difference is you're positive and the difference is you're negative. So you're in a bullish market or a bearish market in the macro short term. This is TradingView. So we use TradingView for anchor VWAP stuff. We use Thinkorswim for pre-market algorithms. Settings low. I'm going to teach this once, and that's pretty much about it. Because this is some secret sauce. So ready? Watch this. Wait a second. Some don't seem right. Here we go. Nope, TOS doesn't have good anchor VWAP. Okay. So you see here in our last buy operation, actually let me, well, that one probably doesn't work too good. I mean, it kind of does, but, oh, whatever. Oh. So here's another tactic that we'll follow, right? So right here, you see we break over the 50 SMA, right? You can see that there's a red line, we break over the 50 SMA. So this yellow line is really just a reference where we break over the 50 SMA. Okay. I'm going to go back on a 1 minute chart to wherever that is, which is right there. All right. So this is the day. So this is the day right here when the market broke. Stupid ass freaking, it's being so dumb today. It's like I click the arrow and then it gives me a fib. It's like, no. So that right there, that's where the 50 SMA broke up. 50 SMA break up by operation. Okay. So what we'll do, take this guy and hold on. Oh my lord, why are you so terrible this market? Okay, look at my screen right now. Look at where my cursor's at. This is what keeps happening. You can clearly see that my arrow is over the anchor VWAP, but it's selecting horizontal line. Like, sure, bud, sure. It's like, okay. So that's why I keep having that friggin' redo this. Alright. So this yellow line, that's where the 50 SMA broke up. That's where the buy operation's potentially starting. So if we know that a buy operation's potentially starting and that algorithms run the market and they're doing the buy operation, then arguably we want to track the volume weighted average price of the buy algorithm. Hence why on the day that we break the 50 SMA and we start to go positive, we start anchoring to the 1 and the 5 minute chart. There's other time frames to do, but we'll start 1 and 5 minute because it's the closest moving kind of time frame. So we'll take a 1 and a 5 minute and we're going to anchor to the 50 SMA break spot. Now the reason we're going to do that is because we know that a buy operation is potentially starting. And if it's going to be successful, it's going to work, then there's a good chance that they're going to run that algorithm and they're going to hold the volume weighted average price. So hence the buy operation starts. There's your dip into the 1 minute VWAP of the buy op. Nice intraday long, right? And if we look at a 5 minute, right? There you go. Look at where the 50 SMA breakup and the buy operation starts. And then we track the 1 minute and the 5 minute volume weighted average price of the new buy operation so that on the day that the buy operation starts, we look for dips. We look for dips into that VWAP and add long. So that would be using a 30 minute buy. Use a 30 minute buy with 5 or 1 minute trends for entry. There you go. And if you use one of those 5 minute or 1 minute long entries, then you would basically be long back from like here. All right. And now where's your market? Here. Not bad. There are situations where it doesn't work that clean, but you get the point. Again, market's not perfect. Walk it. Walk it. You have to anchor the green line VWAP, go to trading view, hit anchor VWAP in projections, and basically click a candle. TD Ameritrade is free. It doesn't cost it anything. I think you have to like deposit some money. It's actually Charles Schwab now, but yeah. Fibs. Yeah, so no, fibs, no, or let me phrase that. Standard deviation is to give us a better understanding of longer-term statistical value. Fibs are to give more of a, I would say, kind of like a pinpoint projection of a particular move in the market. So again, take like for example, we'll do a couple of these, right? So 1 second, it doesn't matter, but yeah. So I mean, there's a bunch of ways. It's hard to explain everything perfectly, hopefully, but it didn't even make sense. But yeah, so like again, here are fibs, right? So let's go to a 30-minute. TD does not cost monthly. Charles Schwab does not cost monthly, right? So we will take this right here. So this is an overnight gap. So market opens here and the previous day's close was there. So on overnight gaps, we look for 161s, all right? So like here's a gap, right? So we're going to take a fib and we're going to go from open to previous day's close and we're going to look for around the 161. There's your 161 target, okay? Now we transition to a sell operation and a gap down. So we're going to look for gaps to the downside. So here's the open, and that's the previous day's close. This one actually misses and gets completed the next day. So the next day, we actually open with a gap up. So we would fib from the open to, okay, maybe not because my chart likes to be dumb sometimes. Okay, so we're going to fib from the open to previous day's close. There is the 161 target before dumping face. All right, so we're going to move to the next one, which is here. Okay, so that's a gap up. So we're going to be looking at fib up. So open, previous day's close. This one attains the 161 right there. Okay. Then we're going to move to the next gap. So there's a gap down. This one exceeds 161s, but generally speaking, we're always looking at 161 first because it's the most easily attainable target off a gap destination opposed to 261s, 361s, 423s. So there's a gap down, attainable 161. All right, fast forward. There's a couple random gaps in here. These are basically like, you know, common gaps. So here's a common gap, which is just a gap in consolidation. So this is, this actually fails. I can see it, open, close. Yeah, so that one fails that day. Here's another gap the next day, common gap. So open, previous day's close. Again, there's the 161 and then dump out. Here's a gap up. So we're going to go 161. So open, previous day's close, 161. Doink, doink. Next day's a gap up. So we're going to go 161 probably. So, oh wait, no, this one fails. I can already see it. Got close, but not really. Actually, that one fails because, or wait, I'm dumb. And no, this one works because this is the open down here. Sorry. I might have done that one in the past wrong. Hold up. Yeah, I did do this one wrong. This one does work. So look, we're going to bring this down to the open. I forgot. Sometimes when you move too fast, you get it wrong. But that one worked there. That one worked there. This one worked there. This one got the 161 before dumping out. Then we go into a big gap down. So gap down, open, previous day's close. Oh, god damn it, stupid trading view. All right, so this is going to be open, previous day's close, right there, 161. This one doesn't work because it's a gap down into mega support, so we're not going to cover that. This one works. I can already see it. This one looks like it got close to working. So we go open, previous day's close. This one fails the 161 before dumping. This one works. I can already tell. This one works. I can tell. This one works. I can tell. This one fails. So this is a gap down 161 that fails. But again, also you're in a buy signal operation. So the gap down trading to 161 while the buy operation, you're essentially trading against trend there. So on and so forth. Excuse me. Yeah. tired. It's been a long day. I have started streaming since this morning. And I'm also sick, which doesn't make things easier. Oh boy, what's going on with shitcoin? Let's see. You guys want to see something cool? Who wants to see something cool? I do. So you see this top, this top, all that good stuff, right? Rary, boink. Raries. So remember all that stuff we were doing on the 1 minute and talking about VWAPs? Ready? Oh, stupid trading view. Ready? Ready? Who's ready? Who's ready? Who's ready? 1 second. Almost. There you go. Now you know why the daily chart on Bitcoin has been topping where it's topping. I'm going to take off. Let's just take that off. Don't even need it. Boom. There you go. Because this was a sell leg. This is the counter bounce back to the key volume weighted average price of the current selling leg. And now the market is trying to remain bearish below the selling leg. So if it were to create a lower high roll, right? Okay. Simultaneously, what do we have here? We have a small buy leg or a counter long leg. Rary. Oh, stupid trading view. Almost. Wait. Oh, I see now how the high is being created and how the low is being created. Basically taking the sell leg volume, extrapolating it down. Taking the small little buy wave leg up, extrapolating it up. Key volume. Everyone that got short this market was on tilt when it got back to there. Everyone who bought this bottom, here, everything up, they were on tilt once it got there, right when it bounces, right? Again, you gotta track the players in the game, know where they're at. Check this. Go to the weekly scale. It's not always perfect, but it's damn good. Let's try, well, I mean, I'm not going to try. I'm already kind of, all right, 1 second. Let's go here. Oh, here we are. Excuse me, sorry. So again, if we take the absolute, we don't have to take the absolute low, but we got to find out where it shifts, right? So 1 second, I'm just going to throw this there, all right? This one isn't perfect, but basically right here, Alt-V. That's where Bitcoin bottoms, and you can see the shift from lower lows to kind of break up, right? So from here, we would start anchoring up, right? So anchor here, look for a dip here. The next one actually kind of fails. Again, it's not always a perfect system, but it's damn good. All right, anchor here, and you can see where does the market kind of shelf dive, right there. Right as it fails to hold the continuation of higher lows on the weekly, dump, etc. All right, so now we're going to continue. All right, so to where it breaks up. One second. This is a breakout over resistance, right? There's a resistance there, so that's a breakout. So instead of anchoring the low, kind of like this, oh, that's dumb. Sorry. Instead of anchoring the low like this, we'll anchor to the breakout. All right, we'd anchor something like that. Shies it a bit, but gets very close to the most recent dip low, and then the rally out. All right. And then what do we do? And then we would look and go, oh, well, this is kind of a breakout and a dip, so arguably, what are we going to do? We're going to anchor to where? We're going to anchor to this low and to the breakout of this move, right? So we're going to anchor here, and we're going to anchor to the candle that breaks out. Boom. And then where's your next dip low? Right there. So that's how we go about making future price projections and dip locations and expectations by using past market performance and tracking the volume-weighted average price of the market participants. So basically, you know, yeah, that's kind of, that's, yeah, I don't really got much more to say. Oh yeah, I might as well shoot this one out there. Yeah, right now, we don't expect Bitcoin to go to all-time highs or press all-time highs or do anything crazy until we get over the top-down volume-weighted average price. So pretty much going from the highs and anchoring the market down, we know that until it gets over this trend, you're not going to all-time highs. You're just going to stay doing this. Or this. Or this, down. Doesn't matter. Whatever it wants to do, however it wants to form up and go in between volume levels, it's just going to keep trading down to sideways until it gets enough demand, whatever, and then gets over that price. So again, we can build assumptions, we can do this, we can do that, but the simplest thing to say is Bitcoin is sideways to down until it breaks its top-down weekly volume-weighted average price, at which point we may then expect to see a new all-time high or a new bull run. B's doing pretty good. I'm going out to visit him this weekend. He's got surgery coming up first week or maybe, I think first week of September. So hopefully that solves things. Yeah, for those that don't know, my business partner Brandon, in our room, he's been fighting cancer for, I don't know exactly how long, but a decent amount of time now. So he's been fighting cancer. He's only 35 or 36. So it's kind of, it's tough, but so he's got surgery coming up. So hopefully that helps. Anywho, I think that's a good spot to stop the stream for the day. Again, I'm a little tired, a little sick. I'm not gonna sit here anymore. But yeah, great day. Happy for everyone. Hopefully you guys did okay. If you made some trades, if you didn't, no big deal. Doesn't really matter. Hope you guys learned something new. Hope you guys see the value in the stream. All those good things. Again, we're still in a buy signal based off the market, so I should add my back. But yeah, we're still in a buy operation on the market. I could care less how FOMC goes. If they drop rates, don't drop rates, kind of irrelevant. That's not really true. It's totally irrelevant, but again, it doesn't really matter. Whatever they say goes, and cool. Market's going to do what it wants. Since we're in a buy operation, I assume that, it's going to be positive outcome, and even if it's not, again, doesn't really matter. The reason I say I think the outcome is going to be positive is because you're more likely to be correct in your bias if you just align it with the way the buy operation's going. So since we're in a buy operation, I would just assume that what they announce would have a positive reaction. Now, if I'm wrong, that's fine, but I'll be more correct than I would be wrong. So it's not really, it's irrelevant whether I'm right or wrong. It's just I'm sticking on the side of the current trend, which means I'll more likely be right more times than not over the long run. Yes, you will be wrong, but you'll be right more times than you're wrong over the long run. All right. Hold on, I can't see what the, hold on. Next time teach bots as I hear, but no, nothing. What? Not sure what that means, but anyways, you guys have a great day. I will catch you back on the next stream. Not sure when that will be, but maybe I'll start doing a regular schedule on this. But everyone, cheers. Have a good day. I'll catch you later.